right. Oh no. Um, Giving up, maybe the right word. I don't know. I don't know what the right word is. I hope it's not thought of as giving up. Um, but I understand why it might come across that way. Yeah, it sounds dramatic. I'm not dying. But I use the Kung Fu Panda thing as my thumbnail. I'm not dying. Uh, I'm not giving up on AMC's GME for a run here going into the new year either. I don't find it to be at all unlikely. I think it's going to happen. But um, we had talked about it for a long time, and I'll probably wait for some more folks to come on. I know that I pinged everybody in the Discord because it's going to seem like a reaction. It's going to seem really like sudden and reactionary. Like, where did this come from? It seems very like out of nowhere. It's not out of nowhere for me. So for me, it's been going on for like a year and maybe even more. And so there's a sense in which it feels like it's out of nowhere. I get that. But I assure you it's not out of nowhere. There's a lot of good reasons for it. Maybe some not so good reasons, like things that I'm not super happy with or super proud of, I suppose. But the overall, this has been a pretty positive experience, even if the money that wasn't there. Even if the time spent maybe wasn't as good as it could have been. I think it's been a largely positive experience. So when we talk about the whys in a little bit, I'll tell you a little bit more. But for now, we'll just kind of wait, see if some more people show up. Not that I'm really expecting anyone to show up. It's just kind of maybe polite to wait a little bit, so I don't have to repeat myself a bunch. Ooh, excuse me. Um, when we're looking at AMC and GME today, I'm gonna do my best because it is my final stream. I'm not. I've said this before, and I think that it's a really silly thing for someone to say like, "Hey, this is the end," and then they don't actually stop. And I know that that's happened before. I've not threatened to quit, but I have said, "Hey, I think I'm done," and then I didn't stop, and that's part of the reason that I'm just gonna do a cold turkey kind of quit. So, anyways, we talk about AMC GME today. Really want to kind of give you my final outlook. I'm may prove to be right. I may prove to be wrong. Time will tell. And in the end, right or wrong, I did the best I could. I think from my point of view, I don't have regrets about it because, like, I know in my head, like, oh, I've been right this many times, been wrong this many times. I know where that happened. I know what I got from it, what I lost from it. I know from my experience what I've learned from it. But going forward and not being able to kind of like participate with you on that, I think that I still feel good about the next year out. I really think that this is the general pattern here, and I don't see it changing. For better or worse, some people think it's bad, some people think it's great. And that's not my job. My job is not to tell you what to think about it. My job is not even necessarily to make you agree with it. You could disagree, you could agree. It's up to you. In the end, I'm just trying to present to you what I think is technically viable, what's likely to happen on AMC and GME in the future. And it's controversial, perhaps, for some, but I don't think it's bad. I personally think it's good. So I don't view it in a negative light. Not really. for me, this is probably one of the most critical times coming up. And I know that sounds weird because you're like, well, then just wait a month, right? Why not just wait? And we're kind of about 50 people in here now. That's usually about what we average. So I think that's a good number. And I'll just start talking now. It won't be so vague. So I do think that in the next coming months, this is probably going to be the most critical time in a lot of ways for AMC and GME, because going into the next year, I don't have a crystal ball. I can't tell you what's going to happen. But I do know that the S&P 500 to me looked like it was going into like a topping cycle. If you were to look at it as a gigantic widening of sorts, to me it looks like it's going into a topping cycle. It does not mean it's going to dump off the face of the earth necessarily, but it just looks like we had a big dump, we had a big rally. And when I say topping cycle, what I'm talking about is really just the ebbs and flows of the market. I'm not a big market crash guy. I don't think the stock market is going to rug pull indefinitely. I don't believe that it's a gigantic AI bubble. And the main reason for that is simply because earnings are there and they're pretty darn strong. I mean, if you had no support via earnings, then I'd be like, yeah. And then there's people who are concerned about earnings being bloated or inflated. That's what Michael Bublé, that's what I call Michael, what's his face? Burry. He's talking about them inflating numbers now. He may be right. I don't know. And in some ways it doesn't really matter to me that much. The history of the stock market is rife with drops, but it's also historically gone up. I mean, you can say whatever you want to say about it. I think Warren Buffett said it once, there's really no better investment in long term than the US stock market that's available. Maybe real estate, I guess. Maybe you could do foreign markets, you could do a mix of them. But it really has just gone up. I mean, market corrections will happen. There will be times of depression and recession. There will be times of inflation and all this other stuff. There'll be plagues. There'll be wars. That's normal. So I see it as kind of an ebb and flow. And I think we've been in a bit of a flow period, if you want to call it that, where you have a lot of bullish sentiment. And it does seem like it's wearing a little thin now. The market's rallies have been kind of on thin ice. The rug pulls have been really abrupt at times, and they feel really kind of nasty. And I think that's a signal that your liquidity is too low. So why am I saying that? Because I think that AMC and GME, when we saw what happened back here in COVID, long time ago now, when we saw what happened back here in COVID, we've talked about this so many times, but it's such an important part of the market story here. There's two things. Like, one is what happened with small caps. And small caps basically just rallied and then went flat. And this is not the valuation of small caps. I'm just doing a very, very simple explanation, right, of what was going on. Small caps rallied pretty darn fast. They actually beat the S&P 500 to the top. They have some nasty distribution up the top. But if you look at the Russell 2000 as your kind of metric there, and there's others, but if you look at that one, it just kind of peaks early and then it just stays flat. And eventually it dies. If you're looking at the S&P 500, it looks a bit different. There is a rally here. It has a little bit of a chop, but ultimately it kind of rounds off. It does this business. And it does hit an all-time high right around January, the end of the year in 2021. So a lot of the things that I had looked at early on that involved kind of the market tempo really had to do with that. And why was AMC and GME so behind? And then obviously we had the meme stock rally. Nobody's going to sit there and say that didn't happen. Nobody's going to say the buy button removal didn't happen. I believe it happened. I believe it was criminal. I believe it was wrong. I think it hurt people who didn't need to be hurt. I do think that naked shorting is a real thing. I don't talk about it ever, but I think it's a real thing that happens, and it happens a lot, and it's messed up. I think that it's really hard to kind of find it and penalize it, and the penalties really are pretty minor anyways, considering how much work it takes to find it and prove it. It's not really worth it. Market definitely needs to change. I believe in that message that was preached by a lot of people. I really do. In 2020, 2021, when we're talking about the banking crisis of 2008, I'm going into the workforce at that time, and I got screwed, then and later, I mean, over and over again in this country. And there's all kinds of people out there who don't hurt. They don't feel it. They see it as, everything's good. I'm fine. So how can never, And I'm like, yeah, that's true. There are people out there who are upper middle class or are upper class who are just not feeling it. They don't feel the hurt. We're not that. My family is poverty, if you want to call it anything. We've been in the middle class perhaps at times. I would say we're probably poor most of the time. That's just who we are, like right now. We don't work highly lucrative careers. We chose not to work highly lucrative careers. Some of it's by choice. Some of it's just design of the way things were. So like all of this kind of stuff that happened back here was such a huge deal. I had never seen that kind of money before. I went from 10,000 in our, investment account to like 70, 80,000 in our investment account almost overnight. And I never let go. I never sold it. Some of those positions, I still have some of those positions. Like I still have averages that are ridiculously high. They're like $250 averages or something like that. So, I've said before, I'm not a very good ape, APE. That was the word that was used for a while, and it's still used here and there. I'm not really great as a representative of that because there was a time where I thought that this might recover, but then after a time I realized, at least for me personally, that this was slimmer and slimmer chances, and I really needed to kind of work against this negative investment that I had. My account had blown up here, and it's been a direct correlation to AMC. I had way too much leverage in it, and that's the truth of it. So, you might think, well, you're doing well, with the stock trading stuff. Yeah, I am, but that's really, it's like pushing against the grain there. It's making back losses. It's not, in my mind, it's not like, I'm rolling in the dough now. It's more like, now I've got some traction outside of AMC, and I'm really pushing back against these really horrible positions that have really locked up a huge amount of my account. And so that's my story there. And I think with the market, the story is probably best described as disbursement, rotation of funds. The amount of liquidity that was used in these push-ups, I want to say it was like 6.8 million per 1%. It was a lot. And that's a huge amount of money. And the retail buying in that was significant. And in order to get something like that going again, you have to sort of generate a cause and effect. And then you also have to have that FOMO. I think it's totally possible that there's a short squeeze and this thing could ride back to 72 or something like that. I think it's possible, if not very likely, that this could get as high as 20 or 30 bucks. And if you've averaged down, you're probably going to do okay. I don't think that if you're just kind of sitting on loss positions at $200, I don't know if you're ever going to make that back. And I can't say for sure. I'm not going to be able to tell you. There's no one that can, but I can't tell you if that's ever going to get back there. But if you had to ask my opinion, and I know some of you guys are like, well, I don't want your opinion about it. If you ask my opinion, that's my opinion, okay? I don't see it happening. That doesn't mean it won't happen, and that doesn't mean it can't happen. It's totally possible. When I look at this, though, from an analytical point of view, This is kind of like my best case, and I find it to be the most reasonable. That's it. So it's back to maybe 30s. You're going to retest this floor up underneath 30 here at some point in the future. That's a big move. It's a huge move. If it goes beyond these creeks, if it goes beyond these resistances, sure. Sky's the limit. It could go ridiculously high. But until that point, I don't really have any reason to think it will. And it's not reactionary. It's just that's where they are. That's where that resistance is. That's where the struggle is going to happen. It seems like, even from a technical standpoint, it just seems like this is the place. Hey, Kin Squared, good to see you. It seems like this is the place. Like, and then timing wise, you have, again, like there's a lot going on here that we could kind of address, but it's a little bit like what happened back here. You're in the bottom of this wave, and nobody would doubt that. You're sitting around $2, you know, the stock price is in the pits, it seems, and it doesn't seem like it's ever going to get out. And again, like the truth of it is, I think, quite simple, that there's a natural kind of ebb and flow to the market. And just like back here, when AMC's kind of going into the pits and it looks like it's done for, that's the moment that if you were bullish on AMC, you probably are going to make the most of that situation. Very few people, I think, that exist now were actually in that stock at that time. You know, it's such a small margin of people, I think, that are still around who were there in the beginning when it was really low. And I can tell you that they probably did have doubts. They probably did have a lot of concerns. I look back at it and I'm like, yeah, I mean, it's pretty much how we feel now, you know, that it's just never going to move, that it's being shorted to death. It's that the operators, the institutional money, has no interest in taking it up. But at least now we have the benefit of hindsight. We have a chart that, for better or for worse, does indicate possibility. And ultimately, we also have a market that has been rallying quite a bit, you know. And the one thing about AMC and GME is that they did lag small caps. They did, which is curious. They lag small caps a bit, but then they front run, you know, the S&P 500, which is also interesting because it's like, why would they get there first? I don't know. They did. And if you were looking at the, let's just say they were all going to the same spot. This is kind of how they arrive, right? So you have, first you have small caps, then you have AMC GME, then you have the S&P 500. I see the S&P 500 as in again, like kind of an up wave that's really at a peaking point. I don't want to get too derailed here and talk too much about the broader market, but I did a few charts a little while ago, and it is at a top. If you look at the recent like 4 or 5 peaks, we're getting close to that mark. I mean, we're getting close to that trend. So unless it breaks that, it's really close. I mean, you're talking about maybe 720 as the crow flies, you know, another $40. That's not very far. Maybe it goes way beyond that. I don't know. But that's really where it is. And I'd be surprised if it broke 700 and just kept going. I mean, 700 just psychological level, it would be a smart place to have any kind of retracement. And going into 2026, I just don't have the confidence that some might have. I also don't think it's going to have like necessarily like a massive rug pull. But I do think correction would be in order. So here's the problem, perhaps. We had a chart here that I had done a couple different ways, and in January 2024, I really started thinking more about. That's right here. I'll show you where it is. When the market didn't react up and go back to 14, I started thinking about how it was so similar to what happened in March. And there was this possibility of like a massive backup in the future. And that's still there, by the way. There's that strong correlation with that kind of a bottom as a potential. And yeah, this could be a gigantic, almost double top on this wave, in which case you're coming back to 3 in the future and maybe lower. If they don't fix their financial situation, that's probably going to happen. I don't see why not, right? But nevertheless, back in January of that year, I shifted my focus to the macro and started really looking at, again, like, what do I think is going to happen on the big picture? And at that time, probably don't remember it, because some of you guys were here for it. Some of you have been around since the very beginning, and I do hear you. I appreciate you. Those that are talking and saying, thank you and all that stuff. And I'll address each and every one of you in a little bit, but the general idea that I had was, and I don't know if this video still exists. I had scrubbed through and gotten rid of about a year's worth of videos because just kind of extra stuff. I was like, I don't need like 600 videos on this channel. I need to have like the most up-to-date stuff. So anything that was like over a year old, I just started deleting it. And every year I did it. But I don't know if this video exists. It may not. If it does, it's whatever. It's there. I had done a wave analysis, and what I had kind of determined was that it wasn't particularly good. The analysis was fine, but it was like that this outcome didn't look very good. It looked kind of crappy. I want to say it was like there, because what I noted was that there was an expansion of this particular setup right here. And this is just a classic, like, I don't know if you can see it, but it's really just a classic distributive setup. Like, it looked like a cat ear with a paw and then, the ears. Like, that's what it looked like. And then we saw the same thing here and then the same thing here. It just looked like it was expanding out to try to get you to some downward angle end. And so I came to this semi-conclusive thought that we'd probably hit 14 and 250 within by the summertime or thereabouts. This is roughly what it looked like. And that was pretty close. It got there before June, and I think I had said by June of 2025. We were in January at the time. I was like, it's probably going to get down to like near 250, which is why I bought when it hit like 247. I didn't know it was necessarily going to run right then, but I also knew it needed to get back up there and retest 14. And the long story short of this is that when you go back and you look at these upward waves, they've all been fairly consistently the same. Like, it's difficult to know where the middles are because the middles seem to appear, again, like between 2 points. Like, you can see I'm specifically drawing it out like you would a wave because there's double bottoms, double tops, double bottoms. And in the end, it's very difficult perhaps to tell exactly how to time those out. But that being said, your motions to the upside here have been fairly consistent. They're not drastically different each time. Most of these have been, and I'm going to make this as simple as I can. This is, to me, the most common pattern on the AMC. When you're talking about like patterns, it's really just this big wave, right? And this is kind of the most consistent that we've seen it. And it's consistently just kind of done this, right? And we're in this motion right now, and it's like you look back at this, and then you see where that sets up. I mean, it just did it. And you're like, yeah, it's right there. I mean, it's definitely hitting it. This is the end game for me. The end game for me is this particular zone right here. Now, I couldn't tell you, again, beyond a shadow of a doubt, that it was definitely going to hit at 10:50, at this particular date and this particular time. But I knew that it would be potential. There's potential here for even more distributive action. There's potential here for something of a repeat with what we see in 2020. If you had to ask me to pick one, I would say that the 2020 is more likely because of the gigantic nature of this wave. I think we're ready to go into that macro upcycle. I don't see it as this is going to hit 9 and then do what it did back here and start distributing down to like $1. But in that January markup that I did, in 2024. That is one of the outcomes, and I thought it was going to be like a 2-year thing. And we're going into January 2026. Like that kind of foresight, I think, is as best as I can do. And I've not done any better anywhere else in terms of long-term forecasting than that. You may not believe it. That's fine. But at that time, I had thought, again, you're going to have a possibility that this is going to sink here and maybe not go forward. And it would be about 2 years. It would be a long time because that wave had gotten so wide. And you can see it here. Like, this was the measurement, I used. I just went back and did simple things. And it was a Fibonacci extension. And the Fibonacci extension suggested that the next wave would be even longer than this one, which was pretty long. So you would be down here for a considerably long time. And it's proven to be probably the best chart, I guess, that I've done because it's been fairly true. Now, that being said, that was one piece of this. And ever since then, I've done my best to try to navigate the short-term stuff. And the short-term stuff gets you in trouble because if you're somebody like me, you really want to capitalize on those big moments. But those big moments, they don't come around that often. I mean, if we're honest, there's been 2 here. And that was in the last couple of years. That was May and May. I mean, the May cycle here, I guess, if you want to call it that, this is a smaller iteration of the bigger picture, which I think you can tell pretty easily. Those are the only 2 ones that really presented much of a move. And everything else here has been fairly flat. It wasn't even good for bears, to be honest, when it was just kind of racketing around here. Certainly not options chain for a long time. I see it as, again, comparable to the wave that we saw back in 2020. And I talked about that yesterday. So if you wanted to check that out, check it out yesterday. I think that was a good analysis on that because that's generally what I think about the short term is that this is essentially an equal parts bottom and top and bottom, and that you're going to go into another equal parts, which did happen back here. It just happened higher up. And I think that's appropriate. And that appropriateness extends maybe to about that 1050 range and then back down to just above 5, between roughly 9 and 5 for reaccumulation potential right there in this zone. I see this as 1-to-1 with what happened in 2021. I don't see it as 1-to-1 in proportion, but I see it as 1-to-1 in terms of maybe what the operators are trying to do. How are they making money on this? They're accumulating and then they're going to push it up, start a new rally. Certainly if GameStop goes to all-time highs and it runs 400%, it's going to get a lot of people FOMOing into both of these. If they're run up 400% again, it's kind of boom, you got them, right? Hook, line, and sinker. And I think that's totally reasonable. That's how you get people's attention. When its stock is just kind of dead for a couple years and it has these massive moves, it certainly brings back a lot of money and attention. So I can't tell you what's going to happen with AMC as a company. I can't tell you what's going to happen with GameStop as a company. But both of them are in a position right now going into really December, mid-December, that I think they're in a good position to run up. And if you look back at this, I could be wrong, I suppose, about the wave and where it is and all this stuff. Maybe I'm off slightly. I don't think I am. I worked really hard to make sure this wave was correct. Probably harder than I've done on most things, to be honest, which I worked pretty hard on it. My work ethic with this has been maybe even too much at times. But this idea of the speed and acceleration being right on the middle, I think is very critical. And if you look back at this, when it takes off, this is the center of the wave, It really is. Between January and February, I think this bleeds over into March, 2021. That 3-month period right here, it was probably more it was January 20th to March 20th. So I guess it was about 2 months. Not 3, but that period right there is kind of the highlight, right? Now, you do get another move, of course, later in June, but certainly for those who are enduring the bottom, that was probably one of the biggest moments. And it happens as you would expect, kind of right on the intersection of the middle. And there's so many other things to talk about there, but I've already exhausted it. I've talked about every particular line and angle, and I can't even tell you how many hours we've spent talking about this. And it's all just to say, like, look, if you're going to mark up, this is probably going to be the best time to do it. And unless the chart's just flat out wrong, and I can't say that it is, it is right or wrong. Time has to tell us that. This is the best time to see that markup, and it's coming up. It starts at the end of November here, and it goes through middle to the end of January. It's a different time. And you might say, well, why don't they just wait till January and run it up? I don't know. Maybe they will. I don't know. And that's part of the reason why this feels so abrupt, why I decided to shut it down now, because about middle of the year, maybe like 6 or 7 months ago now, maybe middle of the spring or summer or something like that, I started talking about I wanted to wind the channel down and stop doing the streaming. This has been a long time coming. I'm not by nature, I'm a talkative person, right? But I'm not, this isn't what I set out to do, right? I set out to solve something that was unsolvable, which is to determine what algorithmically was going on with AMC. And I had successes and I had failures. I did some of it very, very well. I did some of it very, very poorly. That's just the nature of trial and error and learning. But I also felt like, on the whole, like I never really wanted to just... All right, well, I think we're back, but the internet's kind of crappy. So, yeah, I know. Sorry. So if it crashes, I'll reset and we'll just start again. We probably do well to do that, but that's just the way my internet is. Usually about noon, it starts crapping out, and I figured that might happen. It's okay. It wouldn't be a Booksy stream lately unless my internet crapped out. It's been awful. That's another part of this, but that's just kind of another part of the saga, I guess. I don't know. It's a bad part. That's a bad part of this. Classic Booksy stream, just crapping out. So, anyways, long story short here, okay? There's a lot that I think there's a lot you can do with AMC's chart, but it all roads kind of lead to, and again, I'm trying to like kind of finalize this for the future because I don't know what's going to happen exactly, but I know that these things have remained. These things have remained consistent. These things have remained pretty accurate, and they're the big broad brush picture. So anyways, back in the earlier part of the year, I talked about kind of walking it back and getting away from this. I wanted to do some other things in both my local community, and then also, and I tried to kind of incorporate that into YouTube stuff because I wanted to help out people who wanted to do martial arts but couldn't afford it, so on and so forth. But I talked about walking it back because I've really wanted to just kind of see it through. A lot of the reason why I'm still here and talking and blabbing on about AMC and GME every other day or two or week or so is because I had a commitment to myself and to you all to see that through as far as I could. But when I started talking about that, I was really looking at August through about now, November. And I was saying that I really want to be done when this is going. And at that time, I was looking at, and I've talked to you guys about this, this window is obnoxious to me because it is a pretty big window. It goes from August till about November. But I really thought it was going to be earlier in the year. It didn't happen, right? And who knows? Maybe it could have, but it didn't happen. So I'm already kind of past my expiration date here. and I've already begun my process of kind of unwinding on the stream. So again, feels very abrupt. Feels very abrupt. I get it. Feels a little bit dramatic. I get it. But for me, it's not really like that. Like I've had so many conversations with my wife and talking about what is this and why am I doing this, and at the end of the day, if this doesn't run in November, if it doesn't run in December, and then it doesn't run in January, I'm going to be asking the same questions, which is, am I going to keep going? You know, and when we did it, we saw these moves up before. It's like it comes up every time. And it would be nice, I guess, to leave on a high note. And I think I was just hoping for that. I think I was really just holding out and thinking that if I can get through that next run up, everybody's going to be happy, right? With that, everyone's going to feel good about it, and we can all leave on a high note. And at least I will have helped somebody, you know, get through this kind of slog. But I don't believe that I'm a hero of the story. I don't believe that at all. I think there's only one hero in my life, and that's it. And it's not me, you know. And those are things that when you get on YouTube and you see these personalities, that's just kind of like the norm. You know, the personality becomes the channel. It's what drives the content. And that was always a scary thing to me, because I'm like, you know, I'm not perfect, and I'm going to have good days, I'm going to have bad days, and I don't really want to do it forever. So I don't want people to create necessarily like an unhealthy reliance on it. But that's as sappy as I'm going to get about it. I'm just going to say that, again, I've really appreciated it. I don't worry too much about the future here. I think it's going to happen. I wish I could have gone out on a high note. It would have been nice. But I think that's a little bit selfish on my part too, just wanting to see it through and see this kind of big move. So some of you guys are asking me like frantic questions. Some are just saying thank you and stuff. The frantic questions, you know, if you're talking about the markup periods here, I've already kind of explained my thoughts on it. 1960 is sort of the top limit here for me. I don't know if it's going to be able to possibly get beyond that point in a single move. If you look at, you're asking me about this, I'm being honest, like it's the same move, you know. If you look back at like 1960, if this had dropped down to like 180 or $2 even, that's the same move. I mean, it's not dramatically different. And this is with like a buy button removal kind of situation. When you look at that and you just kind of just observe it, you know, you can tell that, sure, like that makes sense because this moved around the middle about 50-50. And we talked about it yesterday. This also moved around liquidity. This was the liquid center right here, and it moved around liquidity 50-50 on the build out. I don't think it's that different. Look at where, you know, you are now. Like the major difference perhaps is that it doesn't go up super high if you measure from like 4. It only goes to 7. But isn't that appropriate? You know, that's like right where you need to be. So if we were to look at this and kind of gauge it the same way without expecting it to go to buy button removal, right? But just kind of gauge it in a similar manner, and it doesn't go, let's say, below, we'll just do it 226 for good measure, because that's my number that I like. This would be very, very logically going to like 12. It would not need to go beyond that. I mean, you can see it on the chart. It just doesn't need to. Could it go beyond that? Sure. Long term, do I think it would go beyond that? I don't know. But I've already kind of talked about why I think 1940, 1950, 1960, that's the shift value level. I think that might be as good as you can expect. And really, if you look at where the bottom is here on that shift value, it's at like 15, which is the bottom of the gap. So it's like the top and the bottom of that gap there are pretty decent targets. And if you go back and you look at where the bottom of this range is, specifically looking at where that gap value is and where it took off from, it's a little bit higher, but it's like right here, maybe higher than the way I drew it. And I think that's totally reasonable as well. I mean, take a look at where that is in relation to everything else. It's kind of right where it should be, you know? That's $13 here. That's the numbers that we hit, 1330 or whatever. The numbers we hit in those extended hours time period that we didn't. I just need one stream. This is the last one. Can you give me this? Can you give me this, internet? Just the last stream here. Just let me have it. Thank you. I thought that was a bit high, but you know, I remember the Bukowski target for that being 85, and it didn't even hit that in extended hours. So that for that wedge down on GameStop, which is a huge long-term move potential. So, you know, is it there? Yeah. Is the lower end there? Yeah. And I think that's reasonable. When you look at like 40 to 44 to 48 on GameStop, I think it really does compare very well to this idea of only going to like 6. You know, this region right here at the top of the range. It's essentially like an SOS zone. And you know what's weird is in like a normal life, if this were not AMC, you would be looking at this area right around like 550 or so, and you'd be saying, oh, that's the top. And in like a normal markup, if you had a spring here, you go over the top maybe a little bit, but you could have an SOS with a backup in like a normal stock situation. You could have an SOS with a backup and then go again later and just kind of walk out. You don't need to have like this massive singular move. The only reason that we see things like that in AMC, I think, is just because of the nature of the volatility of it. When things start moving, it's really, really out of hand almost, just volume. And I think that's just the behavior of the stock. But if you were looking at this in the reality of like, hey, if this is not AMC, it's just some random stock, you could have an SOS and then back up to the creek. You know, the only reason that we're thinking the way we think on this stock is because it is what it is. Like if it is AMC, right? And it is GameStop. And they do weird things where they don't really always act like a normal stock would act. They have sudden surges, right? But I would suggest that's actually totally normal. In fact, this motion right here, it may look like it's extremely different from what happened in January, but it's not. It's really not. If you just remove the noise of that massive push and you look at it as an SOS, which comes over the top with a backup, and then this just to me looks like a reaccumulation phase. That's the motion right there. Yeah, we get this huge buying climax. It looks more like a wedge, but it's an SOS with a backup to the creek. I mean, at the end of the day, it's really not that complex. It goes over the top of the range, comes back down, hits the creek, and then it advances into it. And that's what I'm saying, like, the way that it sets itself up, we set ourselves up for like this massive move all the time. It's not impossible, you know, that happens, but it really would not surprise me if it were more muted. I would not worry too much about it. And so when I've emphasized motion here and I've emphasized upside, I've de-emphasized the bigger targets. I've de-emphasized them. I've purposely not talked about them very much. To some people's dismay, they think that I'm like really way crappy, you know, low targets. In my mind, I know that this could extend quite far. This could go to 19. It could go to 15. It could go to 12. You know, but then in reality sets in and I think about how like, yeah, that could be almost 1-to-1, but I also need to just consider the fact that we're not in the same time period. It may look different. And ultimately, an SOS is just that. It's a sign of strength. It just needs to go over the top. what's required for a markup is the sign of strength. It doesn't have to be to the moon in one go. Would it be nice? Yeah, it would be great. I think all of us would be happy about that. So I've gotten away from just calling for the gigantic numbers, and I hope you know it's not because I'm bearish. It's not because I don't think it's possible. It's possible. It may very well happen. I just don't want to emphasize it because for me, it's like I know what I would value is probably the same things that you would value, which is I just want to know what's the minimum. Like everything else is a bonus. If I can get to $6, what am I going to be able to do with that from here? If that's as far as it manages to go for whatever reason, and I don't know what would be the reason, but for whatever reason, I would want to know that. So that's the reason I've really emphasized the accumulation zone or the reaccumulation zone here as a very strong potential for like where it really settles. And ultimately, like the rest of this, I'm not going to be able to, I couldn't control where this went, and I remember the day of getting out at like $10 or something. I got out at a great spot in retrospect, but it could have run farther. It didn't ever let me get out at 13.30. I never hit 14, which is what I had in my brain, So I just took what I got and I didn't complain about it and I just let it be. And if you look at where that is, I mean, I literally exited like right at about 10, and that's right on this creek. That equivalent right now is only 590. It's very low. So do I want to get out at 590? No, of course not. I'd love to get out at like 15 or 19 or something like that. Even 1050 or 12 would be great. But in reality, I don't know what's going to happen. You have to be able to make those decisions on the fly and be quick about it. And who knows, the way this entered in a very, believe it or not, this is actually a very mild drop. I mean, like the way it walked itself down. I think that once we get back up to this zone, there's really nothing here that says it couldn't leave in that way. I've thought about this for a while, and I've thought about the idea of this massive first drop with the slower build down. I was like, I wonder if we're going to get like a massive first pop and then a slower build up. Because we saw that in the timing that we did yesterday too. It's a long period here. It may go as far as August before taking off again. And I'm like thinking in my head, like, what if it's just really slow because this is really slow? So it builds out over a long period of time. And then when it does leave, it's not what we think it's going to be. Everybody thinks it's going to be this massive markup that goes sideways. It could very well be more like this. You're getting one big move in the beginning, and then the rest of it is kind of chop. And it doesn't seem like illogical to me. It kind of makes sense. I'm like, sure, that kind of makes sense to me, and by about midsummer or late summer, you're kind of able to walk out of here, but it may take till the rest of the year to kind of work its way up towards the top. Who's to say? And that is the part that I've really left off. I've really not talked a lot about a second move. A lot of people want me to talk about that. I just haven't talked about it that much. You guys are like, no, you do. You talk about it all the time. Kind of. But I've talked about it in like a very vague way because I don't believe that I'm going to tell. I cannot predict. If the first move is really high, I don't know if the second move is going to be what we expect. You might think it means that it's going to go really, really high, but I kind of feel the opposite way. That's just my gut. It's not TA. I feel the opposite way this time. If it goes really high on the first move, I'm thinking that the second move might be a bit more benign. If it goes lower here, I wouldn't be surprised if there's a second leg up at a later time in the late summer next year or something like that. And it would be closer to August as opposed to like June. But that movement to me is not that important because if this works out well, I'm not going to be sitting on positions for another 6 months waiting for it to move. That's just not what I'm going to do. So I have in the past, starting probably around 2024, really started talking about letting this kind of be over and be done with and moving on. And the long story short is that it's just time. If I continue to go, and I already went past October, which the timing is wrong, but I already went past October, and that was kind of as late as I really wanted to be on here. I figured it was going to be different than last time, quote unquote, last time. I did not think we'd have some kind of a December dump on the 10th, like almost the same as here, right? I thought we were doing everything a little earlier, and it looks like it is. Most of the dates, by the way, and I don't know if you guys remember this, but most of them were clustered between November 7th and November 24th, and one specifically was on the 13th, which is tomorrow. And I took it to mean that, because it's a weird day, it's a Thursday, and I looked at that and I thought, well, I don't think we're going to see anything too crazy on a Thursday, but it wouldn't surprise me if maybe Thursday into Friday something happens, like a hit a low or hit a drop or something that signifies like a pivot moment on the bottom. So I said I didn't anticipate it was going to run up by then. I was trying to be really clear about that on the Discord group, that I did not feel like it was likely going to run at that time, but it was more likely that's probably a low or close to a low, and a pivot plus some accumulation could take some time. And there's a pretty big window there. None of these measure perfectly. In order for you to know exactly where this is going to be, you have to have a point of termination. You have to have like an endpoint in mind, right? And if you don't have an endpoint in mind and you don't have the midpoint on point, and you know already that we did it yesterday, and I said, really this could be quite wide for a midpoint. If you don't have an end and you don't have that, and you can't triangulate it. So it's like I could guess based on the windows, and the windows after this time period right here in September going into October, which is kind of the first window, the next window is pretty freaking wide. And I mentioned that, hopefully you guys remember, because I really didn't want to mince words about it. I could not find like, oh, if it doesn't go in October, it's just going to go like the next week, or it's going to go here or there. I mean, it really felt like after this little window here, which again proved to be more of like a low pivot here, and it ultimately was a change of character, I believe. It pushed over that creek locally, for sure. I just said the windows really look kind of stretched, because you can go from as early as November 24th, which would be awesome. I would love that. That'd be amazing. To as late as, frankly, you can go as late as like March. I mean, it's just too big of a window. And most of the dates were between November 30th and like January 12th or something like that. It was not, most of them were not, most of them were not like later. I just wanted you to know. So I'm going to clarify that. Most of them were this time, but that's a big window. And I just didn't feel comfortable saying, here's when it's going to go if it doesn't go now. I don't know. I can say that if you look at it this way, it does make sense, because this goes from November 13th, which is the date that I thought there'd be a pivot, which is interesting because that pivot came from an $8, $8.91 triangulation. It didn't come from this, but it is an interesting pivot point. I think it's an important one, right? It goes from that date until about January 12th. If you go and look at what was going on during that time, it might give you a better picture here. And yeah, I'm specifically trying to narrow what I talk about today. I know we could go into all kinds of stuff. On balance volume looks really good right now. It's come down a lot. It looks like it did to some degree back here. The RSI is divergent presently on the 4 hour, just like these two bottoms were. We did dip below the very low, at 237 or 36. I think we hit a low. And all of that looks very similar to what we saw back here. But, when you go back and you look, let me show you what I'm talking about. So if I were 100% correct, which I doubt I am, but if I were 100% correct This would make sense. So this would be like a pivot point here. This is January 13th. Interesting, right? Because that's a weird day, kind of like November 13th. It's very strange. It is weird, isn't it? How like almost perfect it is. And then this is March 8th as opposed to like June 9th or whatever we have now. Same window of time, of course, because the measures are all the same. This was a low, but it was actually it had already hit the low and it backed up here. It had jumped that local creek, done an accumulation and backed up. And then it takes off, and you can see that the high is not, although we could probably, again, change this and just say, well, it doesn't have to be that high. It just had to come over the top, right, which is like 41. So in reality, who knows? This could have been like a lot lower, you know. That's pretty much what we would expect to see locally if it were, quote unquote, 1-to-1. And if you take an average of that time span, I think you would have been pretty safe to sort of split the difference and suggest that it runs in the first half. It actually looks like it's like a quarter system almost. You can see there's a maybe like a creek cross right here on the quarter. That's more GAN stuff. This one, it's kind of crossing down on the quarter. It's like running up hard, hits the peak. It almost looks perfect and then drops. So, you know, do I think that that's a good way to measure it? It's okay. I mean, it might work. I don't put a whole lot of, I wouldn't put a whole lot of stake in that. I would just say, yeah, it looks pretty good. That's a decent enough way to measure that, you know. So what that would be, if it were, again, 1-to-1, which I don't think it will be perfectly 1-to-1, would be approximately, and this looks a little bit more like the 14th, just being straightforward about it, and then January 9th. 14th is a Friday. I said the 13th, but that's just because of the date that I got originally. Then it would potentially find support over, if you're looking at this in a 1-to-1 way, like let's say you thought it's going to be exactly the same. And I don't think it is, but we'll see. This would come above and then come back down on Friday and land on top of 246. It could be that simple. It could look that simple. There's a little gap right here at like 258. There's another gap up here at 290. That's a pretty critical level, I think, to jump over. I don't believe there's an extensive amount of gaps beyond that point, but there are a lot of little ledges that you can look at, like the 350 area. This is what it would look like if it's going to run next week, which is very much hopium, but it's there. And then the expectation would be, again, if it's basically 1-to-1, you would be back into the middle roughly before the 10th, which again, maybe that makes sense. If the 10th is the date when they announce the vote, it's possible that we're kind of already coming down into it, and then that vote kind of solidifies a drop. Who knows? It could also be that, you know, we're overextending here and we're really not going to go that far. But this would imply that basically by December 1st, you'd be at a high. The other reason that could make sense is because of GameStop. So GameStop does have proclivity. I don't know if it always does it, but it does have a tendency, at least every now and then, to run up into earnings as opposed to running after earnings. And usually if it's up into earnings, it usually dumps afterwards. We've seen that more recent days. This one ran up after earnings and then came back down. These two were up into earnings. This one was already up into earnings. This was also pumping up into earnings, and then it came back down. This was going up into earnings, came back down. It's more about continuation than it is about the earnings, but certainly you could make an argument that it is often up into earnings. Same with this one. It ran back up into earnings. There is an earnings report estimated for the 3rd, Wednesday. And so, you know, is there an argument to be made that somehow it peaks on the 1st or end of the month? I guess. I mean, there's an argument there. You might even not see that move until that day. It could be that it's sitting at 40 something or 32 at that day and then it moves. But I could see that making sense. So I guess that's a good enough guess as anyone's going to make timing wise. If you're wondering about whether or not this has jumped the creek or it's satisfied its conditions or if it's satisfied the range, it's come and gone, you know, like it spent more time down here than it did up here. So from a wave standpoint, it's about October 28th was the 50-50 there. So it's like it's already spent as much time down here, which is probably why like right around that time we just dropped into a strength test. I mean, I think they're done is what I'm trying to say. I think the range is satisfied. I think you're going to make a decision whether you mark up or mark down here pretty shortly. So if you're asking like timing, is the timing finished? Yeah. I mean, it's like I said, it really has. It's spent as much time in the bottom half as it has in the top. If you're asking about creeks, see more time actually in the bottom. If you're asking about creeks, not including these two guys, because I get that this spent a little more time beforehand. If you're asking about creeks, does it jump the creeks? Look, man, there's a lot of different ways to draw it. This is probably the best one for you guys to use if you're doing this on your own because you're just using the peaks, the last 3 peaks here. I think this is perfectly reasonable. I don't think that the top is a very good one because it's constantly expanding. And it's part of the reason why I don't like the linear chart because it just continually like, it just has that kind of a fan motion. On the logarithmic chart, this is approximately where that creek is. I think this is fine. Didn't you say this jumped the creek? Yeah. My creek was originally quite specific though. I used a markup that was like here. I saw this as like a double projection through the creek. I want to say it was slightly different, but I'm not going to be able to draw it perfectly on this chart. It's on another chart. I saw this as a push up through that, but then again, that would just raise the creek. So if you're going to do anything, just keep it simple. The breakout here is so absurdly low. The requirements for a breakout here are so ridiculously low. Like we're talking about this straight up stuff, but if you're just somebody that's sitting on the sidelines, you don't want to try to buy a bottom, which is really smart because you're like, well, man, this could still drop to like $2. You don't know. You're right. I don't. So it'd be kind of silly to just be like, hey, I bought the bottom. Ha ha ha. You know, well, great. That's cool if you get it. But for most of you, let it reset there. Hope has nothing to do with this. Come back to reality. I think I live in reality. That's why I'm doing what I'm doing now. Because I'm not going to continue to press pause on it. I didn't say anything. Don't worry. I waited. This is what you'd be looking for. A higher push higher than 320, basically that 316 area. And then you probably want to see that back up immediately to like about 295, and then it could go. The only area that I'm really concerned about in the grand scheme of things is the region between about 4 and 350. This is the only area that I think could present a danger zone. Because if it's marking up, it might hesitate here, but this is kind of the squishy middle of the stock's range. There's not been that much trading here, and it's used it to both bounce and reject. And then the only times we've really seen a high amount of volume were during these pass-throughs. So these are difficult ones that these are difficult ones. I think you got to be really careful about this. There's a danger zone here because if it were to reverse, then and it leaves this area, especially if there's like a hook around the top here around 360, I just would be really cautious. I think at that point, it's hard to know because yeah, it could just settle and then go again, but just be really careful. If you're already making money, you know, just protect it. That's all I got to say. You don't have to get out right away or something, but just protect it. Think about stop losses obviously all the time. Because if it were to distribute here, my concern is that this goes into the 10th or something, and then they announce the vote, and it just tanks the stock to a new low. And I think that's a possibility. You guys are like, well, yeah, but what about all this other stuff? I don't know what happens after that. I mean, we've seen ridiculous things, guys. This thing moved in like 300% in like, or 200 some odd percent in like 2 days. I mean, we've seen some absurd movement on this ticker. This is not, this seems outlandish. I get it, but it is not out of the realm of possibility, to see something crazy like this. Just be mindful that that's a danger zone. I think it's a little less predictable, and I'd prefer to just see us kind of walk right through it. If we can get through that area, I don't foresee any problems up to the top. And then you've got one more area that could present, I guess, some danger, which is another one right here, which is the just the top of the range. It's like anything else. If you're going to distribute at any point, you go to one of these two places. So because this is the middle, you'd hit the middle and reverse, or you'd hit the top and reverse. It's that simple. Especially up here where there's a macro creek and the wave. That'd be the place you'd reject because you get the most FOMO. But if you wanted to kind of rug pull, that's probably where we'd do it. This is not really like, it sounds like an opinion, but this is me just kind of marking off the liquidity levels. Like, they're already there. I didn't make them, they're already there. So you can see them visually. You don't really need me to tell you that they're there. I think they're just there. So I'm going to just say it's a fact and move on. I believe that they're there, and it's just the area you'd want to be careful of. That's it. Those are the two areas you distribute. And then everything else is smooth sailing, I think. You just watch those backups and stuff, so on and so forth. So how do you leave on the bottom? You make a push here. Ideally, it needs to make a higher high at some point than like 262. I mean, 267 is a really key level, but you ideally hit 246 and then you just leave. We're sitting underneath it and we keep chopping around it. I don't like that. I don't find that to be particularly encouraging. So we really need to come above it and then come back down and check it. If it doesn't hit it perfectly, I wouldn't hold my breath. I would just be like, okay, is it making a support? And then, yeah, I totally do think that it could be as early as Monday, but this whole window should be thought of with skepticism. It really should. You should be skeptical above all else about the possibility of direction here. And again, who knows with the timing? Part of the reason why I'm just kind of pulling the plug now is because I can see it kind of going here and then pulling back and chilling out and then dropping and doing some kind of stupid thing or it goes up to just like 324 and then it drops back through. That would be bad. Any kind of a advancement with a drop back beneath this creek should be thought of as kind of negative for the most part, unless you see an immediate reversal, in which case it's a change. You have to just treat it like a change of character. You can't predict a bear trap there. You just have to take it for what it is. Any kind of a reversal here back underneath the range should be thought of as like a hook. If it pushes up and then comes back through underneath the creek, excuse me. So that's the way I would think about it. I wouldn't overcomplicate this. You're really in some ways, if you're just trying to buy on this ticker and you want to know when it's going to go up, this is the zone. And it's low. It's pretty low. But that's where they've established it. And it makes sense. If you go back to 291 up to 315 right here, that's where the gap was. And that's really where we've been chopping here. So if it can get up above there and hold, it should move out to the top of this range and then move out to the top of the bigger range. That would make sense. GameStop is pretty similar. It's not that different. Yeah, man, appreciate you coming on just to say bye, even if you can't stick around. And I do, it matters to me that it mattered to a lot of people. I'm happy if it helps some folks. And I know that not everybody shares that opinion, but that's okay. So a lot of people, I'm just like another YouTube hack. I get it. It's fine. I can't tell you guys what to think. So, this is actually looking pretty good on GameStop. I was looking at this the other day, and we talked about it yesterday. There's a lot of question marks, perhaps, about maybe this as a diminishing motion and where this goes back to. These parallels are attached to the parallels in May 2024 by design, because I looked at AMC and I did it on purpose, because I looked at AMC and I thought, well, if we're reapproaching the bottom here, and I think and I believe that this is indeed a sweep, like it's about to go below the range, then I should be able to draw a connection. So as soon as it hit the bottom, I went over and I was like, all right, it hit 239. I went over and looked. It was on the 7th, and I checked it. So that's where I put the mark. I think it was on the 7th. I don't know. And I went back and I did this analysis yesterday. I'm not going to go through the whole thing again, but just very briefly, I did a 50-50 climb out of there based on the markings that were made. And it works. It goes back to the middle of this massive drop down. Hugely different from AMC in some ways, but also consistent in that, hey, if this is on an uptrend and it's hitting the bottom, then we're looking at kind of the same thing. It's not apples and oranges per se. I mean, they're both fruit. It's not that different. I guess what I'm trying to say, if this is a bottom and that's the bottom, and we're expecting them both to go, I think it's reasonable to conclude this would be on an uptrend, and it does look really nice. It's respecting its uptrend quite nicely, and we've done this before, because I did one that goes all the way back to 2020 as well, and this is already kind of below there. It actually rejected below that one right here. So in my brain, I've already kind of been thinking about this. Somebody asked about it in the Discord group, and they said, hey, is it also going to go into a sweep? Is it going to go low? And I said, it kind of already is, because if you look at this on the macro and you do a bottom to bottom line here, this is already like broken down out of that big giant trend. So, and then in scheme of like the local area, it's already gone below the June low. So, I mean, it's already pushed below the floor here, and any floor here, really, for that matter. It's gone below it. We've reapproached this level at like 20, and I guess maybe for some folks are going to be like, well, that's really where the bottom is, if AMC's bottom is on the 4th or whatever. I get it. So, maybe it doesn't go below there. I don't know. It doesn't really matter to me, because it's the same story. And if I left it at that, that's kind of how I would want to leave it. It's really the same story. The narratives are different. They're different companies, but from a technical standpoint, they're almost the same. If AMC can drop down to 178 in a super deep terminal shakeout or whatever, then I think GME can go down to 18 or 17. It's the same proportional levels. If AMC can find its footing, I don't see why GME wouldn't be able to find its footing. The only difference in this particular time frame, I suppose, is the GME back here, and it's not that much difference. It's like 2 or 3 days. But GameStop ran up on the 6th of May and was ready to go on the 10th. Now, if you recall, so that week was a big move week, right? That's May 6th, and then again, Monday, May 10th, it's like running. If you recall, AMC was actually in its lows at that point. There wasn't a lot of fanfare. There wasn't a big buy up over the creek. We didn't see it happen in extended trading hours even. It was really difficult. It really just went down for that same time period. It went and hit that low here, and it just sat there, and it closed what looked like almost beneath the uptrend here. And then on Monday, it just opens up high. It's like already above the creek. It basically did all this stuff that I was pointing out earlier. It did it all in like an instant. I think within about 20 to 30 minutes, it had dropped down to 320, and then it just reversed. And that was it. That was all the warning that you got, Wasn't a lot. If you had an alert, you could have caught it. But if you didn't have an alert, you might have slept in or not looked at your phone or whatever it was for a minute, and it would have been gone. And it really was a huge 100% per day kind of deal almost. And so the only major difference, I suppose, right now is that GameStop from what I can see visually, right, what I'm perceiving with price action, GameStop hasn't made this push up yet. But I did note that that positioning of that push up is quite interesting because the same exact marker, and I'm using this yellow line to indicate the two, that same marker is at like 32 right now. I think it's a bit much, you know, and then maybe if we get a 1 week upside here, AMC still chilling out. I don't know. It puts us into the end of November. I get it, but the second half of November, Thanksgiving week kind of stuff in the US of A. But that would be where it's at. It's like kind of right here around 32, which is where the warrants were. And it's the top of the range, essentially. So it puts you in a creek jump. Technically, a creek jump could happen below there because the macro creek here, again, as far as I can draw it, the highest one, technically be jumping out of like 27, which is important. From the June high, it certainly looks correct right where it's at 32, that area right here. So this actually does a very good job of setting it up in kind of the perfect triangulated spot at 32. So that's quite a bit higher than where we are now. That's $12 away. But it's likened to the same percentage move here. I mean, it really is, because these are the same lines. So it would be like that early move pumping up however much percent and then sitting there for a week and then going. Does it have to be 1-to-1? Again, no, it doesn't. And I think that, all right. Sorry, Michael. This is my last stream, dude. I'm going to ask that you not flood the channel with just negativity. We know there's a possibility. I think everybody's aware. You're preaching to the choir here, because I've talked a lot about 180 and the possibility of going low. So, you know, you're not surprising me by saying it could go low. I mean, I'm just like, yeah, you're right. But it's not really the time to start pumping other stocks here. And I mean, that's just, go to some other YouTube channel. They're going to be around for a while. Maybe you can find a new place to do that. I don't know. Whatever it is you're doing. AMC has been the thorn and the burden in a lot of our sides for a while. And I'm going to just say my piece about it, right? So I want to get through that. But yeah, I mean, this could make sense, you know, running up into the November 21st area, and then the 24th through the 1st would be the next Monday. That's fairly consistent and would actually look quite nice on the chart compared to where it was in 2024. I'm not a big fan of GameStop going to like over 100, but it is there. I did a wave analysis on this. This is a big sideways motion. There's a lot of cause that's built up one way or the other. So I got to be honest, you know, we say the same thing about AMC, but it's harder to see it perhaps. On AMC, it feels a little more hit or miss, I guess, because AMC just feels like junk. But I don't agree that we're not in a time of testing. Like, we're certainly in a really important moment for AMC, and I don't necessarily think a markdown has to make the most sense here. The same would apply for GameStop. So when I look at this, I'm like, all right, this wave is pretty magnificently huge. And if you look at the motion there, if it does the same thing, it's simply 1-to-1. The 50% is over the macro, the big picture double top here. This is the two high points on this move. That's about $48. It's like 46 or something. And then when you look at the liquidity levels that would be checked, it'd be up here around 80, and they may extend a little beyond, just like they did here above 60. Not much, but maybe, you know, and again, some of that could be in extended trading hours. I can't guarantee it. But it's there. If we get above 46, I don't see any reason why it shouldn't go. I mean, frankly, just looking at the chart here, I'm like, yeah, it should melt up to 85. I really do think that. And it makes sense logistically for a lot of reasons. We talked about that yesterday. So if you want a fuller recap on that, you can check that out. One of the things I always think about with, or at least for the remainder of the week or whatever, one of the things I always think about with GameStop is like, does it make sense in relation to AMC's chart? If it doesn't make sense, why? Again, not because they have to run together, but because historically that's been correlated. And it would make sense if they ran together. So, yeah, that's fine. And I'm telling you right now that we're in a place where you've come down to the floor. It goes where it goes from here, but if it passes the liquidity test and it's ready to move, it's going to go one way or the other. It's going to mark down. And in a markdown, I think, would be like something like this. You'd probably see a final up thrust, and then you'd come below, and then you'd probably just stay there. I mean, I genuinely think that if it drops low, you're going to see it repeat again, probably till, I don't know, maybe it does something like this, but down lower, where it kind of buys up high. I would not hold my breath at this point, you know. You have to see a change of character at some point, because it's not, I'm very doubtful it goes down indefinitely. And this is the situation where I'm like, maybe it takes till January, and I'm not going to sit around and sit on the stock at $1 to $2 talking about how, well, it sucks, but, well, you know what I mean? Like, you guys are going to be aware that it sucks. C'est la vie, right? That's the grind of life. You'll see it, and you'll be like, all right, this sucks. But you decide what you want to do at that point. If it does this, I wouldn't be worried about it long term, but at least short term, I'd be like, yeah, it's done. This is out the window. Because we shouldn't miss this. This is not I don't know, this isn't much of an optional thing for me so much as it is like the macro structure. If it leaves the macro structure, that's bad. Like, if something is changed. If it doesn't, then it's kind of just doing what it's always done. So don't take my sudden and abrupt, like, I'm done kind of thing as a sign of like AMC's dead or done for. I'm not of that opinion. I'm really not. Some people are going to feel that way. That's not what this is about. And I've kind of already talked about what it's about, but it's just time to move on. And I'm not selling my AMC. I'm going to still trade this if it happens. I'm not selling my GameStop. I'm still going to trade it if it happens. I'm not bearish on them, not particularly. I think that we've spent a lot of time down bottom. Again, I've already said my piece about it. So this is not a signpost of like regret or a signpost of, oh, I'm giving up on them forever or something. It's more about the logistics of the stream. I've had a lot of difficulty streaming over the last, year. Internet junk. I don't know what's going on. I don't stream for money, so it sounds kind of greedy, but it's just the basics of life. Like, I need to be a provider in my family, and if I'm spending like 4 hours on a stream every day or more, sometimes I would spend all day on these streams, and I'm not providing. That's not good. That's not a good place to be. If it were my friend and they were doing that, I would be telling them, yeah, maybe you should rethink that. Like, if you were doing that and you were spending all your time charting 2 stocks, and I would be like, hey, listen, I know that you care about this. I know that you committed to it, but you need to at some point just pull the plug. And I think that's how I want to treat it. So I was in a position where I thought I would wait until this big run up. I know I'm repeating myself, but we have a lot more people on the stream now. I was in a position where was like, oh, I could wait for this big run up, but then it didn't happen in September, October area. And it's like, well, I could kick the can. I genuinely do believe this is a great window for a number of reasons, but it's a big window. And then it's like, if it doesn't happen there, am I just going to keep kicking the can until it finally happens? I can't do that. It's not you guys. It's a commitment that I made to my family and to myself, to move through it and just be done with it. So I've been putting it off and putting it off and putting it off, and it's that's not good. So yeah, and then in terms of the Discord, so I know I mentioned it in there. I'm going to be leaving the Discord group. I'm not going to shut it down. I'm not going to kill it forever or something like that. There's nothing spiteful there. There's no bad mojo. Nobody did anything or said anything. Quite the opposite, actually. I think it's been a really positive experience, and we've had a really good group of people in there that just like to do TA, and they've really enjoyed, I think, the back and forth, and I've liked seeing other people's opinions, and we disagree sometimes, but it's been overall like really good. I understand, like, it feels like I'm cutting off all connections, because it kind of is, but another part of that is, again, like time. I've devoted way too much time to, like, perhaps in my case, right, and it's just my personality, I suppose, and what I do. I just kind of give too much to things that maybe they're intangible things, but like they're good things, but they're ultimately not always the best. So it's a good thing to have community. It's a good thing to have a Discord group to bounce ideas off of. I think it's really strong. But it's more about job stuff. And like, I was thinking about how I wanted to trade full time, and I started doing that. I trial and errored it, and I did okay. In the end, I made about 600 into about 5,000, and then I lost about 1,000, maybe a little bit more like 1,500. So in the end, it was like pretty good though. I just kind of pulled the plug on that for now, and I made money on it. So I was like, well, maybe I could do this, but I'd have to really devote time to research and really devote time to finding good setups and all that stuff. And it's not a diss on anybody. It really is not. It's not. But splitting your time between maybe more of a social kind of community charting or organization, if you will, versus just kind of doing the research. I just found myself with a lack of discipline there. Like, I'm not taking initiative to do the work myself and just really do it. And so I know that I can be successful, but I also know that it requires a lot more of my time and attention. And I really could not, it was really hard for me, just me personally. Again, it sounds like a breakup. It's not you, it's me. But it really is. It was more about just me being able to handle that. And I get too distracted. So I need to be really disciplined if I'm going to do that. And then I also do animation stuff on the side. And I say on the side, even though that was really my primary career. That's a huge love-hate kind of thing that I've had for years now, because I love it, but I also hate it because it's really difficult to get a good career going in that. And I don't know if you guys heard of this thing called AI, but AI is here. And it's not going anywhere, And there's some careers that I think are going to do just fine. And then there's other things that I'm like, man, I don't know. Like, you're already starting to see the layoffs happen. And I definitely saw a huge dip in business personally with my animation stuff. I don't blame people for wanting to be cheap. I don't blame people for wanting to just have access to things and just do it on their own. But the arts has always struggled to have value in our society for a number of reasons. People don't value it. It's everywhere, by the way, and it's everywhere. It's in everything you do. You can't even avoid it. You know, you look around your house and there's brands and logos and industrial design and interior design and all this stuff, you know, and then there's interface design, UI design, UX design, all of that stuff. You may not know this, but that all comes from like art school. You know, it stems from graphic design. It stems from media and animation. Those careers can be quite lucrative, but it's coming to a point where we're competing with. First, I was competing with all these people who have been laid off in 2008, and studios and all this other crap shut down, and just the workforce was a bunch of 50, 60-year-olds with 30 years of experience, you know, versus you, and you're selling yourself short because you have to. Then it goes to oversaturation. Everybody's doing it. Everybody's trying to get in on it. You got way too much competition because everybody thinks they're going to be the next Pixar or whatever, you name it. And it goes from that to, you know, AI. And now we've got people that can make videos and promo videos, you know, by typing in prompts. And there's literally like people on our my freelance platform that are doing that. Like that's what they do. They're prompt writers. I don't want to get into. I'll tell you my opinion, and then I'll just leave it at that. My opinion is that artists have a skill set like anybody else has a skill set. They've worked on it for years. They're human beings that have the ability to be creative, to impact other human beings with stories and with design and with all these things yes, it comes the human baggage that comes with it is real. You know, you have to pay that person. You have to work with that person. But AI has driven its business from using derivatives, and everything's kind of derivative, I know that, but like using derivatives of other people's artwork to basically undermine the artist. And it is in some ways quite insidious, I think. I did not think it would be as big of an impact as it was, and ultimately is. I don't think it's going to replace the artist, but I do think that you're going to have more selection. So one of the other things was like, I run this other business. That's all I'm going to say about that. I would much rather I will always hire somebody to do design work. I will never use AI. I don't think it's right. And I also don't think it's good for us as people. The less we do ourselves, the dumber and dumber and dumber we get, you know. And we already know that academically that's happened. It's going to be like that creatively too, unfortunately. So anyways, that's all I'm going to say about that. But I will say that on a personal note, like my business took a really big hit. Like year over year, it was a huge difference. And so I'm talking about what I want to do now, and I don't think I can keep doing it. So it's like I can't do YouTube forever. It just takes time, and I'm not really making anything from it. And I need to move on. I can't do my animation business easily. It's like really tough, and I'm struggling there, you know. So all I've got is the stock trading, and I'm like, I can do that, but it's pretty inconsistent. You know, you might make $1,000 one month and lose $50 the next. That's fine, like long term. You know, if you're making good money, and even if you're losing some here and there, it's fine long term. Once you can build up a padding, I don't have that kind of padding, and so I need to get something. I don't know what it's going to be yet, but I need to get something consistent so that month to month my family's not like concerned about paying the bills, like we got to pay the bills. So it sucks because it's not just this. Like, I'm not just giving up charting. I mean, I'm still going to chart stuff. I'm still going to trade. I'm really turning a pretty big corner myself in my career as well, just deciding what I'm going to do next. And I don't know yet. I don't have the answer, but the longer I put it off, the harder it's going to get, I think, to just make that jump. So yeah, it just needs to happen. Those of you who are older, you probably are thinking about it like, this young guy, he doesn't even know, and then those of you who are younger are probably like, why are you giving up, man? You shouldn't give up on your dreams. There's a friction in the middle. There's a point in everyone's life where they decide, is this really what I want to do for the next 20, 30 years? I've got half my life is passed by or whatever, and am I going to continue to do this? And if not, you need to kind of act on it. And earlier the better, I think. Find what it is that you want to contribute to the world. Put everything you can into that. But then also make sure that you're able to provide what you need to provide. And I think if you can marry those two ideas, you're really blessed. I think you have a really great career. Most of us can't do both. I mean, most people just pick one or the other. They either do what they want to do and it's not the greatest monetarily, or they just pick something that pays the bills and then they just deal with it. And I think both are fine. I think both are noble choices. Just depends on the person. But you have a lot to consider when you go through those kind of things. So that's kind of where I'm at. I'm not trying to like bring the mood down, but it's more than just this. So this has been going on for like 3.5 years, 4 years, right? 2021, we're in 2025. It's been 4 years. And I've been doing it for 4 years, and it's tough, man. It is tough. It's tough to let it go, but it needs to happen. So I think the first video I ever did was probably right around here. I mean, it probably was around November 12th. I mean, to be genuine, I don't think it's up there anymore, but I remember it was in November, and I don't think it was the end of November. So it was probably like right in that middle period here. It may have been like the 9th, because I remember this run up. It's kind of crazy to think about. And what a whirlwind. Yeah, it's pretty wild. Why don't you just charge something? He's in it for the money. Bill Paxton. I don't know what value I provide that'd be worth that much. And that's a problem. So I totally understand where you guys are coming from, because you're like, well, why not just charge for it? And then that solves all the problems. I have thought about it before. I don't have a good business model for it. I don't know. I'd have to provide something that is worth that much. I know that in the presence of value, people will pay money. Cost is never a problem when there's good value. I understand that. But that value is subjective, and ultimately it can change if it's subjective. So if I don't continue to provide something, I still have to have that model. So like you may say, well, I'll pay for that. You pay for it now, right? But if that were to change or it were to adjust, you may decide later, I don't want to pay for that. Or you may think I can get by without that. That's totally normal. And so in order to have that as a business, I believe, and I've done this enough, if you don't have work coming in, you don't have work going out, right? So it's like you're constantly feeding the monster of business. You're constantly feeding the business model. And that's just something that I looked at what other YouTubers were doing. I considered it many times. I looked at what other people were doing. I looked at them monetizing. I looked at them pushing ads and getting sponsorships. I looked at them, you know, doing like paid services for their Discords or, you know, and most of what I heard is criticism. I mean, there were people who felt like that was worthwhile, but I mean, rightfully so. If you're charging somebody 50 to 250 a month or whatever it is, you better be providing that value, you know, and that needs to be like within returns and all this other stuff. So I don't think that's an easy thing to do. And I feel like that's a huge burden. Like it's important. It's an important burden, but it's like that's not what my degree. I'm not a financial advisor. I'm not qualified to tell people this is a good investment, this is not a good investment kind of thing. I can give you my analysis on a chart all day of the week because it's a chart. It's a stagnant thing. I'm not telling you to trade it or how to trade it. I'm not telling you you should or shouldn't. I'm just saying this is what's going on. This is what I think's going on. That's very like hands off. I think it's fair. But there's the people out there that are getting like they have like 100 people and they're charging 50 a month. I mean, yeah, that's great. I mean, they're making some money, I guess. But if you're making $5,000 a month off of people's backs, you better be turning that back on them and giving them that money's worth. You better be worth $5,000, you know, a month. So it's not something that I feel like I'm comfortable doing. I'm sorry. I wish I was, but I'm just not. I've never been comfortable doing it, and that's why I haven't done it, and it's been 4 years. I can't convince myself to do it. So, you know, yeah, take care, man. You spell your name like my brother spells his name. So, yeah. I'm with you. I'm with you, Philip. I think it'll be okay. There's a little bit of sadness in every change when you like what you're doing. And I don't know if I've said this, but I do like it. It's not that I don't like it. And you know that was what I was talking about before. If you can find something you like to do and you're good at it and you're qualified for it, I think you should charge for it. You know, but there's missing pieces there for me, and so therefore it's just not the best fit. That's kind of what it boils down to. We are skirting around 247, and 247 is a key level. So there's the 246 is the low. 247 will be above the floor. I don't like how dramatically slow it's moving, like 1 penny at a time. I don't mind it on the very bottom having a little dip there, but I really want to see it walk up over and hold over, and it hasn't done that. It just hasn't done that. So we need to sort of see it in light of that. This is another thing, is like when we're charting these things day in and day out, it's very boring. This will be like 99% preparation time. That you want to see that move up here, and it'll happen when it does happen. And you know, and I can say when. I mean, obviously, you guys know, take that with a grain of salt. But when it happens, if it happens, I suppose, better way to put it, then it will probably be pretty subtle. I don't think you're going to see I think you're going to see that support without a whole lot of fanfare because in both cases, in both 2024 and in 2020, and really going back, even looking at March 2022, which is, a different kind of run up, I guess, but it has a similar make and model to it, I suppose. That initial break here is always so low key. You don't see volume, and someone mentioned the volume thing as well. You don't see a lot of volume in the move until you hit really like when it starts making higher highs here, because as smart money as they call it, that money flow they've already bought in. It's not like if they were going to buy in, they've already done it. Does that make sense? What is being signaled is markup. So there's a different phase for that in Wyckoff. It's like going into phase C and D, where you're basically like in a markup phase, which I think goes all the way to like E or something. But those markup phases are really fast, and they're defined as having like a buy-in, where you're buying into the stock purely for the purpose of moving it up. So the markup, as it's called, is really about changing ranges. It's like, let's take this thing up. It's hard to imagine doing that because from retail's point of view, we're on the side of the road watching the horses race almost. It's like you can't really even imagine it. You can't even really imagine. You just can't imagine it. Like you can't imagine. I have the power to move this. I'm just going to decide to move it, and I have to buy in order to move it up. It's almost unheard of because it's like we can't do that, but institutions can. And Richard Wyckoff, when he talked about it, he didn't talk about them buying shares to accumulate in that phase. It really was about moving the stock price. Because again, if you've got majority of shares bought and you're sitting on a big pile, you can start covering short positions. That's not going to have a huge amount of volume change. You can cover any kind of short positions that you gathered all the way up top. I mean, you could have short positions from back here from a year ago. They're just sitting on it. You might be like, why would you do that? That's such a long time to pay interest on them, whatever. And I'm like, yeah, sure. But if you've got a huge 500,000 share position, a short position here, just even starting to let that go in a trickle is going to cause that stock to move. And you got to think like all the way down, you're buying and you're shorting, you're doing both. You've got tons of ammunition to get this thing up. So it's not unusual that in that final setup, you get this really crappy, almost ridiculously low volume in the beginning. Like they'll just push down, the volume will be really heavy towards the push down. That's your strength test. And it's very light. And you're like, where's it going to go? And it starts very, very, very much like benign. And that's really what you see even here. I mean, just look back at that volume from May. It's like there's nothing there. It goes from like basically super low to average to all of a sudden being like billions. It's just ridiculous. And I can imagine that being very startling, but it's totally normal. So when I look for something, I know it's probably going to be fairly boring. It'll end with a fizzle. It's not going to feel like anything's going to happen. You'll see something silly like a creek cross, and you'll just see it like kind of gently come over the creek or something, and then it'll just sit there, and you'll be like, what's going to happen? And then if it goes, it goes, right? You'll see it melt up. You'll start seeing numbers go really high, and you're going to be like, wait a minute, is it really happening right now? No way. It can't be happening right now. And then you wait for those markers to hit, and then all right, well, it may be happening, right? And then all of a sudden it's 20%, 30% up every day, and you're like, oh, it's happening, right? It won't be like some big broadcasted like thing in the beginning. So just so you're aware, like someone had asked about the volume, and they're like, oh, volume died. I'm like, yeah, that's pretty normal. They push down. This is all huge volume pushing down. I think on the 4 hour on balance, it came pretty low. wouldn't have surprised me to see it drop lower or to even still see it drop again. I mean, I wouldn't be overly surprised, but it is in a spot where it should be in some ways. It broke beneath this uptrend and or broke down beneath this uptrend, and I think that's actually really good. If you look at 2000, if you look at the big markup in 2021, and then if you look back here, this is the same deal. Like this lost the trend right here. It gravitates on it, lost the trend. Now this has a bounce out. It takes time to leave. That's something to consider. Could do that. But ultimately, like it traded below that trend. It's just a trend on balance. It's not the end of the world. It's not the most important thing in the universe, but it did do it. It did drop beneath it. It went a little bit south, right? And then it reverses and takes off. And that's when you have this really heavy sell down. I don't know if you see that volume here. That really heavy sell down is actually in the first half of that move. That's here. And then the rest of it, it's heavy, but it's like consistently so. And it's not, it's really hard to see it when I'm zoomed out like that, but it's really not that much. The first part of it up to about here, I can see it on the chart, is actually quite high. And then it gets pretty light, even in the final days there. And it doesn't change again super dramatically until you get to the big markup. It stays pretty low. So this whole area has fairly consistent volume. It's elevated, but it's not, it's really not like astronomically high. So if you're looking for high volume, that's not really what you want to see. You see more of that. Let me move it over a little bit. There you go. Now you can see it. You see more of that in distribution when there's extremely high volume. It's a little bit more like a distribution when that's going on, usually in the peaks. The volume elevates, but it stays pretty light. Even on these bottoms, it's pretty light. This is a very deceptive motion. There's a heavy volume right here. Very odd. I mean, look at that. In the last day, the volume is like dwarfed. The last day is like one of the lower volume bars here. But you can see like heavy volume is actually the first part of that sell down. The second part, the buy up is decent. It's got decent volume there, and then it kind of chills again. So we would not be, I think we'd be in I wouldn't say wisdom, but it'd be wise to just consider the volume. And it's super important. It's like the number one indicator that you have all the time. And it is an indicator. I don't know if you guys treat it that way, but when I heard that, I was like, I like that, because you always think about it like it's just part of the stock, but it's a good indicator of everything. So yeah, I mean, there's been heavy volume in the first parts of this. I wouldn't be surprised again to see maybe another drop, but all things considered, like this looks pretty good. If this rebounds, I don't see any reason why it can't go. Interesting too here, look at that 4 hour. It's already jumped the creek. That's actually really interesting. I didn't see that before. It's already jumped the creek here on the downtrend on balance. Again, grain of salt, maybe it comes down again, but like I think if it breaks out here, it's gone. I think it's going to take itself back up. I really do. Yeah, that's kind of what I want to do. I want to at least try for a bit to focus on trading, but I need to get like a consistent part-time job to help fund that account. I know it sounds weird because you're probably like, well, then you should just self-fund it with your own money. You said you made money. Yeah, but what I noticed is that I made money enough to take money out. So there's the problem. So like I made enough that I could take money out for paying the bills and stuff to make up what I need to make up for and be a contributor in my household. But then I was like, I'm not really making enough to reinvest. So I ended up taking out, quite a big chunk of what I made. Almost all of it went back into for now. So it's like, if you had a longer standing account with a lot of wealth accumulated, you probably could take like a paycheck, from yourself. I think that would be reasonable. That would be a long-term goal. Be like, all right, I'm going to pay myself from this account X amount per week or X amount per month for this kind of a salary. So you could kind of give yourself a salary knowing that it's going to be, of course, taxed the way it's taxed. And then you have like a dedicated kind of stream of income from that. And then you can reinvest anything else that's not going towards that. But what I found is that I pretty much ended back where I started not because I didn't make money, but because I had to take money out. So it was like, well, I'm glad I made the money, but that's just a hamster wheel. And if I have a couple bad weeks, it's not consistent all of a sudden, right? So I'm trying to figure out what is going to bring in a little bit more consistent income. I'm looking at remote work. It's probably going to be something really boring, like data entry or some junk that'll be replaced by AI again in like a year. But I need to build like a consistent income so that my trading money can be my trading money, if that makes sense. Because if I had started with 650 and I ended with 4,500, there's no reason mathematically, given, yeah, you're going to have some bad weeks, but there's no reason mathematically you can't turn that into $1 million in a few years if you're good about it, if you're diligent about it, if you're disciplined about it. You'd have to be extremely disciplined about it, but you could totally do it. But if you're constantly taking out half of that or more, the profit that is, in order just to pay bills, that's not sustainable. You're really just kind of resetting every time with the same amount. So that's not going to work. So you have to have some kind of a padding or like some kind of a long-term solution to that. And it's an easy solution, but my solution is I should just get a second job that's more like lucrative, I guess, and do that. Because then I would have the money, all right, I can just put that right in the bank, and then I've any extra I can actually put into investing instead of the other way around, right? That's a better place to be. It requires a little bit more time, but it'll work better in the long run. And again, I know personally, and I know people take it the wrong way. I get that people lie about that kind of stuff. I don't know why I would lie about it. Like, I'm being honest with you. I told you guys, like, I did well. I took money out. I lost money at the end. But overall, like, I had like a 70-something% success rate. So I know, like, when I focus on my energy on it, I can do it. I have to be disciplined about it to do it, but I can do it. So I'm like, no reason to lie to you, because like I know what I made. It wasn't like astronomically high in the end, because the bottom line is I had to take money out. So it's like I get to this point where I'm like, yeah, I don't know. I don't really want to be on another hamster wheel. So I need to find a way to make money for my family in a consistent way, and then just kind of have that feed into trading and not the other way around, at least in the beginning. Maybe down the road it can change. I have to hit kind of a threshold, I think, and then I think it'll be fine to sort of switch back over. But for now, it feels backwards to me. It's like I'm just grinding in a different way, and I don't want to do that. So I want my trading account to be compounding, I suppose. And in order for me to do that, I can't touch the money, which is impossible by itself right now for me. That's just a logistics thing. So thanks. Appreciate it. Yeah, man. Moonlit Rifts. Been a long time. Appreciate you. I gotta go. I mean, there's time and for everything under the sun, right? I really do appreciate you guys hanging out today, but yeah, it's not a sad thing. I know it seems sad. I mean, but not all sad things are evil things. So yeah, I've looked into futures trading. I think I might do it. When I did day trading a long time ago, it was just shares for the most part. I mean, I remember trading some leverage stuff and that didn't go too well, but I do remember pretty much only trading shares. It just, again, it was more about the overarching kind of what are you making, how much time are you spending doing it, that kind of thing. Options is a way for me to make a little bit more money more quickly. It is very dangerous. You have to be really careful. And you can get screwed just on the options contract. It may not even be that you got it wrong, which I don't like. I don't like that. It really bothers me. It's like you get it right, but the options don't go your way, and you're like, I just picked a bad contract, you know. That's just, again, you just get good, right? Just get better at it. Um, so that's something that I'm weighing as well and thinking about. But no, I've looked into futures a couple times. I haven't done it yet. Maybe that's something I could do. And somebody asked me earlier if there's any other stocks I've been watching. Not really. Like I was watching this ASST thing. I don't particularly love it, and I don't find it to be the best trade. But I think it might get up to $2. It's possible. I also find it to be a little bit like a lot of these others where they're kind of like floating on delisting kind of levels, and I think that's a dangerous thing. So you got to be a little bit mindful of that. I haven't traded this. I had this up the other day because of the big drop. A lot of volume there. I'm not sure what to make of this just yet. I suppose if this breaks above 14, it could go back up to near 16. This is, you know what the ticker symbol is on this? It's ADIA. It's weird. It looks like ADIA, like idea, but anyways. I don't love it. It was just one I was looking at. I don't trade Tesla as much as I wish I could, but Tesla's one that I think it's just a whole nother beast when it comes to options trading. You will win really, really, really big on Tesla. You will also lose really, really big if you're not careful because the value of contracts goes up and down very wildly and rapidly. In a breakout where it's flying, you're going to make a ton of money if you get in low. That's what I don't like about Tesla. If I had to pick one thing, is that you kind of have to know where the bottoms are to really make good. Because if you bought a contract here and say, oh, I think it's going to go to 500, maybe, something like that. And in the meantime, it goes from like $1.50 to 30 cents. It's not going to get back to $1.50 until it breaks like the all-time high or this local high here. I mean, it's just the way those contracts move. They're so laggard, and they, then again, it's like, so I've seen so many times where I've bought in like a day early on Tesla, and it'll go up, and it'll say like your daily gain percent is 300% or 600%, and you're like, whoa. But then you look at your bottom line, and it went up like 600% overnight, which is crazy. So if you had bought the day before, you would be up 600%. Whoa. But your timing was off. So you're really down like 15%. And then sometimes that's it. That's the whole move. You just lost. You got it right. You were just a little early. And that's kind of the way that I see Tesla. If you can't afford longs, you're kind of stuck doing short positions and that. Short-term positions, I should say. And the long-term positions are stupid expensive. 10 grand or something, for a contract out in January or whatever. It's just a kind of a rich boys playground or something. They don't have to be boys, but you know what I mean. I don't think that's the best one. If of all the tech stocks, I would suggest that and SPY being just an ETF, pretty slow moving. It's most of the time it's good to trade. I would actually suggest AMD if I had to pick one. Apple, I've found again a little bit difficult to kind of catch bottoms on it. It's so erratic ever since Trump took office, and it's just been all over the place. Now, if you remember, we called out 300 or something way back in April. So, I mean, it wasn't a bad call out. At the time, I could tell it was lagging and it was going to make up for that and it was going to move pretty hard. It still hasn't gotten there, as far as I can tell, at least locally. Maybe it got there before then. But I think, I don't know, did it hit 300? I can't even remember. Maybe it did. But, this is one of those ones that was like, it was pretty easy to tell, but the tracking of those entries was a little challenging. And it had some ridiculous long bottoms. Like, I remember sitting on this one low for like 2 weeks, and I just held on because I was like, it should go up. It should go up. It should go up. And then it did. And it went up. And I got out, and I was like, well, thank gosh, because that was really silly, like how long it just sold off for no reason. It was not even moving. It was just sitting there, It had like negative 1% red days kind of thing, or negative 0.1%, like constantly. I don't think big tech is necessarily the best place to go right now because honestly, yeah, they're really high up, but there's too much fear in it. So any of these rug pulls are just so nasty, and you can see these moves. They're just so abrupt. And it's like, you think about it, the people who traded this and made the most money on like Google here, they had to be in these lows and then out on these highs. They couldn't have been trading or long-term traders, I suppose. But if you got in when it pumped up here, you'd have been in a chop zone for many days. And that's kind of typical for a lot of these tickers. You buy in thinking that it's going to do this kind of thing where it's stair-stepping up, but it's really in like a sideways action. This has been fairly commonplace at the end of October for the tech stocks. I personally am just not investing in them until they see some direction changes. I don't like the range that they're in. Most of them are sideways, some kind of sideways, right? AMD I found to be pretty good though, in terms of signal reliability. It's fairly reliable compared to some. I mean, it's a simple like buy low, sell high kind of thing, but you can use like RSI on it, and it seems pretty reliable for the most part, if that's what you wanted to do. I had tried to invest in retail. Like, I did invest in Target. I did ride Target from like 80 to 100. I got out of that once it hit profit, and then it dumped or something after, but it took a long time. It really slowed, and it slowly walked down forever. So I spent most of my time averaging down and rolling stuff out. And eventually it did pay off. Nike was one that I looked at. I thought that trade deals would help, but I don't know. That one just didn't treat me very well. Financial sector's been okay. I felt pretty confident about NU a long time ago, and that's just done very well. It's not done. I don't think it's done. I think long term it's probably one of my favorite investments. It's an emerging business, and they could obviously not pan out, but they make a lot of money and they're expanding. And it's a banking app in like South America, if you don't know what it is. They do all online. There's no brick and mortar. But it was like non-existent. It's like SoFi and that one, and I think some others were like competing perhaps, but there's good reason to think that goes quite a bit further. It's only at like $12 or something right now, and it started at like $3. But that's a long-term trade. I found that I didn't really ever trade. I don't really trade mostly banks or anything like that, but there were a few other tickers here and there that I picked up on that were banking stocks, and I made okay money on them. I don't really like to trade money on things I don't fully understand. So there's some things I'm like, yeah, I'll invest in it, if the setup looks good. Like, I don't, this Strive is like, maybe the setup didn't look the greatest right now. It's okay. But it's like, if the setup were to look good, I might invest in it. And Energy, I've invested in FANG. I think I've talked about that. I think long term oil is only going to become more scarce. So I think it'll be worth more. But I don't think that it's a short term play. I invested in EXE at like $100 and it went down for a long time. I traded EXE. This is just one that their profits are really, really growing year over year. They're doing very well. I think they're in Oklahoma or something like that, but it's a Expand Energy, and I think it's a good one. I mean, like I invested in it with the thought that this was probably a longer term investment, and I'm just going to buy and hold it and get dividend payouts and all that junk. It looks like a cup and handle now. Maybe a cup here. See if it stops. But these are things that, again, I don't know. Was this good as an options trade? At times, it did very well. FANG was not a good options trade. I thought that FANG's options chain was garbage. It just not enough people buying and selling stuff. So there's just not a good market for it. So you can't get out of your trades very easily. And then the bid and the ask are always hugely spread apart. And I think that's the same way for like MPW. And some people are like, well, MPW is garbage. And I'm like, look, if they fix their balance, if they fix their tenant situation, they should be fine. And they're going to be fine. Obviously, they're self-governed, so they can implode just as well as they can succeed. But it's a REIT. And I think another part of that is, what's going on with the housing market. And I haven't really seen that correction take place. So it's still really expensive for a lot of people to get homes. So, I mean, they're not in housing. They're actually in medical properties is what they do. To me, that seemed like a no-brainer. I was like, well, medical properties, I mean, you always got to have, hospitals and stuff. They're in a historic low, At the end of the day, whether it's $5, which is kind of where it's at now, or it's $2, I still think that's ridiculously low. They've been up at like 40 or 50 before. Yes, they've had problems. Will they have a comeback? I don't know. Can't guarantee that. There's others that might be better as real estate goes. So don't take my word for it. Do your own research on it. This one ended up proving to be a pretty good investment. And I bought in like way over here somewhere. I don't remember. And then it went down for a while. But it was just shares. And then I played options a couple times. It's still moving. It looks fine. So like in terms of like picking stocks, I don't typically look for the same things on all my accounts. I have one account that's like a retirement account, and I'm really just buying shares and investing long term. That's it. That's an investing account. And I believe I treat it like that. I don't think about things in terms of short term financial gain. I only think about, is this something that I think is going to grow over time? And then I have a trading account, which is more short term. Those are different. Those I look for really, I don't look for just like value entry. I look for specific time frame. Like I'm going to trade from here to here, and see what I can get out of that. And that's a very specific kind of way to trade. It's not for everybody, and it certainly comes with risk. But like I said, I think the market, this is not ideal having the gap here, and certainly it could bounce around and come back down. But I think overall, the S&P 500, like I told you guys on the big picture, I really do think it's probably going to go up to near 700. It's very basic TA. But it's been doing pretty much the same thing every time it pumps up and then drops since back here. So this is the trend that is trying to be met. And it's not the only way to chart this, but I guess in this case, if you look at these two tops right here, it'd probably already be over the top. But I looked at this, and that's very high. And then I think I had looked at this one. And it's kind of sitting right on there right now. Again, these are just little dinky trade or dinky trends. The big one was here, and I'm not seeing it. Maybe I'm like not zoomed out enough. I don't know where it is. I'd have to look on my other chart because I don't remember where it went. I think it was this because I looked at these and I thought that was interesting. This is a lot like what happened at COVID. There was a like a broadening that happened. Yeah, it's like this one. Here to here. So it seems reasonable to me that this might stutter here because this is kind of like entering like a sideways period. But I'm thinking about what happened back here. There's like this stuttering and then it trying to finally pushes up. I think we're in that motion of like, well, we're probably going to push up here and try, but I don't know how far you could possibly get. And like 700 to 720 is kind of the max. You know, and potentially if you drop this even lower, then we've already hit it. So there's a lot of danger in assuming things with the market that it's going to definitely go way high or something. And a lot of people don't like trends for things like SPY because it's an ETF. But and so you're like, well, you know, you should be looking at liquidity. Well, there's no liquidity levels up here. You have backwards liquidity. There's not really much to look at. You look at fib extensions. You could look at, I don't know, what else you'd look at. This is kind of like the peak creek. And then I would say this guy down lower, also likely. There's a lot of resistance right there, almost like a head and shoulder. And that's already been hit. That one's been met. So if it holds on, it's probably where that gap is. If it holds on here, I think decent chance it tries to go up to the top here. Again, this may be like a Santa rally. If it can't hold on here, then, and especially if it moves past this like 50-day, yeah, it's just correction. There's nothing else to it. Correction territory. And the last time it did something like that, maybe early on, you can see like some of these are just weaknesses. Like usually gives you a bit of a sign of weakness. This one just full on dumped. But this seems appropriate. Any of those. So if it does drop, I wouldn't be surprised if it held on to like 650 or something and tried again and then came down. But you know, in terms of these runs, this is pretty much as extended as it has been. I was really curious to read about the markets on the whole. The European markets and overseas markets, they're outperforming the S&P 500 by a lot. So people were making a big deal about AI bubbles and junk, but in terms of percentages, the S&P 500, the market on the whole, and not just the S&P 500, you have the, you know, you're talking about the Dow and all these other ones like the Qs and stuff. They were just saying like on the whole, if you look at percentages, even though U.S. markets feel like really overextended to a lot of people, they're thinking they're done. It's really not very good. We're not really performing at the same level as the rest of the world, which is interesting percentage-wise. I thought that was really curious. So, and then, you know, earnings have been beating late October, early November. I haven't seen any earnings with massive misses from the bigger companies, but we're kind of still chopping here, so I'm curious about that. And, you know, if you remove the top 7 stocks, this is even worse. So it's like, I don't know, man. The unweighted or whatever it's called, unweighted, I don't remember what they call it. S&P 500 is really flat by comparison. I have no idea what's going on with what do you call it? Small caps. Because, so I'm probably going to need IWM. It's been a minute, so I don't know if there's any charting data on here. Yeah, well, not too far off. probably made this back here because I wouldn't normally have done that. So I'd estimated that it would hit a peak around October and then go sideways, which seems to be about right, although it's lower than I expected. It's chopping on the top. So it's kind of a bummer. It is widening and the RSI is coming down. So it could be a reset, like an RSI reset before another leg up. Widening is a sign of uncertainty to some degree, or like one side is kind of fighting back. So obviously profit takers, right? If the widening breaks to the upside, it'll be super bullish. If the widening breaks down, it's just like the S&P 500, just correction territory. I don't see it very controversial here because normally a widening on a top, when it does happen, leads to a pretty huge leg up. I don't know why this wouldn't go to 300, but it just isn't. Probably because tariffs have like disproportionately hit small businesses, and it's been much more difficult than maybe even a lot of people anticipated for small businesses under this administration thus far. That could change. I don't know what's going to happen, but they have disproportionately affected the bottom line, I think, for a lot of smaller caps. That's all there is to that. I would probably draw the comparison. I think I did this on purpose. But I probably wouldn't draw the comparison of just looking at these three peaks together. This already hit that creek. So if anything, maybe something like this, if it levels off and pushes up later in the year, sort of rounding, but I don't know if I'd even do that comparison. It's just different. I would have read, and I think I still would, I would have read this as like a halfway point here at like 213. So I don't know why it didn't go all the way up, but we just didn't. We're just kind of chopping. I guess it just hit that resistance and got stuck. Market makes the decision. If people don't think it's worth that much, they don't think it's worth that much. They don't think it's worth more than where it was repeatedly the last, I don't know how many years. I find that to be a bit bizarre. This is like 4 years later, and it's the same price, and it's already undergone like all of this movement. Part of me wonders, I guess this could be like some kind of a cup and handle. It's a super deep handle, which is unusual. You usually don't come beneath 50%. And I guess if that were the case, because that's a massive amount of time, I guess if that were the case, it could go to like 360. But I'm not seeing any clear evidence right this second. It's ready to break out. Thanks. Appreciate that, Hab. Yeah. I'll have to look into futures better in the future. I'll check it out. So, yeah, I don't know. Maybe that's all there is to it. But if it legs up again, we'll see. I remember doing this with a longer term in mind, thinking that this was going to peak here because it's the middle. And historically, the last time it did that was in the COVID run here. It middled out and then went up. So maybe we're in that kind of a squishy middle, possibly. And it would make sense if the top ends up being like 360. It's pretty close. Yeah, that's pretty close. It's not like right on it. It's more like 350. That would be approximately where the cup and handle would go, and it does make sense if this is like a middle. And this did happen right here to some extent. There was sort of a top, tried to get up over the top, didn't at first, and then when it broke, it went. if that's the case, it's pretty close. I think November might be a bit of a grind, and then we should see some release and hopefully in I hope. I know you guys are like hope doesn't have anything to do with it, but I'm just saying, looks like November would be a grind, and then if you can get through that and break one way or the other, you should see some release going into December, or maybe even mid-November into December. So, well, I mean, I've been talking about it all day. Stevie, I've kind of already done the analysis on it. Well, I'll just tell you the bottom line. If it comes over at 246 by Friday, and it can hold support there, it's good. You know, it may take some time. I don't really have a lot of hope that it's definitely going to run before like late November. It's a matter of the waveform. I mean, your on balance is broken out, which is great. That still could drop, but it's out and it looks good overall. It needs to kind of get above 35 million here on the 4-hour. But the price action here is that we're dancing around. We hit a new low, and now we're dancing around the support at 246, which I believe is critical to the success of this if it's going to move. Now, I've got it going straight up here because we did a macro analysis earlier, and I was saying that I genuinely do think this is where the middle is, and this is usually the most accelerated part of said middle is right here. So I marked it off where it passes through these two tickers. This is the same place it went up in January 2021, albeit that was years ago, as you're aware. But timing-wise, we just kind of looked at that gently and said, all right, what did that look like from here to here? And it was a 2-month window. And it ran in the first 0.25% of that 2-month window. So it was a very abrupt move. The timing on that implies that you'd probably hit some kind of a, like the spring would have already happened and you would hit some kind of a support by Friday. So, I mean, that really is upon us if this chart's to be believed. And I did the best I could. It's the best I can offer right now. I don't put anything else into it than I've said I put into it, which is I put a lot. But it's still me. It's still a person. You don't know this is for a fact. You don't know for a fact it's going to do this or that. So I believe this is as close to accurate as you can get. But I would not put it past operators to wait to the last second. So any kind of an upthrust here that goes above into the threes and then drops beneath, I'm just not going to trust it. If it drops beneath that main creek, which I think sits around 295 now, if it goes up above there and then comes back below, it's got to be just taken as what it is, which is a bearish signal there. You really should see after this dip, if this is a successful sweep and they're not going to take it up and drop it really hard into some terminal action, if this is a successful sweep here, they'll just take it back up and it'll be kind of boring until it goes. And then it should see support above 3 to 315. Very similar to where we were in, May. But anything else, I think you should just take it with a grain of salt. The highs here, I'm looking at like 1050 down to as low as 6. I don't know if it's going to run really hard or higher, but maximum, we're really just, to me, I'm like, max here feels comfortable between 12 to 15 with a possibility of 19, but I don't think it's very likely. In reality, anything above 6 here is an SOS for this bigger range, this bigger wave. So normally, and what happened yesterday when I talked about it, and I know I'm repeating myself, but normally this settles underneath here. So it's about a 50-50 through the middle liquidity. And that's what happened in 2021. So that would place you consolidating, important to note, underneath $10. Not above it, or, not on it, but underneath $10. Presumably, you would see this go back up to like near 10, and then it would chop until it crosses the other major creek. That could take a really long time. So the timing of these is pretty long-winded. These waves here, they're slow. So to put that into simpler terms, if you take this is approximately up, down. If it does it again, you can just kind of shift it over, and you can see like this is really long. This lasts until near August, September. So this other leg, it might be assumed that it's going to go up super fast. I'm not going to put my money on that because proportionally this is just much slower. And so presumably this could take a really long time consolidating here, and I don't see why it wouldn't, but you're spending time in the lower portion, or excuse me, the middle portion, the lower portion. Now you're spending time in the upper portion. I think it's perfectly logical and consistent with this stock to spend equal parts time. And then ultimately, yeah, I think you're in a position where right around 890, that's just where I'm going to leave the number. I think you break out and you hit like 891, and you build a support there, and then you start up again. After that point in time, this is a very long-term analysis. So you have to take it as a complete and total shot in the dark to some degree. But there is a wave here. And after that point in time, I think it's reasonable it comes back to like 34. The more I stare at it, the more reasonable it seems to me. This is the bottom from back over here. This is kind of like in time with where this is expected on the wave, 1, 2, 3. It's very close to intersecting that region. I mean, it's right there. I don't put a lot into, anything like fortune telling or anything garbage like that. But no offense if you like those rocks or whatever you guys like. But this to me is like, all right, if I'm timing it out and I'm trying to get from one side to the other, that seems very reasonable to me. But in the reality of the stock, there's two places, and that's the top and the bottom of this gap, that create kind of a fan here from way over in March. And I already know this one's like right here because I did it before. And that's sort of the area of like on this bigger wave, that's the area that's most consistent with a 50-50. So like you'd use these two, and that works. The longest one is way out here, and I don't even know where that is. It's way out there in like 2027. I think it's the end of the year, 2027. So, you're talking about 2 years away, or maybe it's 2026. I don't know. I have no idea. I just remember it was like so far out there that I'm like, I'm not even going to try to estimate that. Yeah, that's 2026. So this is like a whole nother year. It wouldn't surprise me if this hits a little early. That's what happened over here, and then it kind of chops sideways. So, waveform-wise, if it breaks out going into August of 2026, and you get to that point and you're still in this ticker and you're like, this kind of worked, then I'd be you're looking at this and you're saying, oh, it's kind of worked out. Maybe the timing's a little off, but it worked out okay, and you're looking at this as a possible markup. I would anticipate that the operator's not taking it past here. I'm not saying they couldn't take it up higher. I'm just saying I would not make that call. The only thing I can kind of say about that is that I am using a lower mark for the 50. So you can see it goes up a little farther. What that might account for is this. That hit right here in July in 2023. And if you look at where that is, that's a pretty important level as well. That's a significant level. So if I were to say like, all right, where is it going to go and how does this relate to it long term? You can see that's like the bottom of this breakdown in 2017. It's a pretty important retest. Granted, we spent a lot of time on that area before the drop. So part of me is like, I don't know if you need to hit it. I could definitely see you extending to it, but I wouldn't count on it. That's 55, by the way. That's really high. Is that equal to these moves? Yeah, but it's slower. Why is it slower? I don't know. Should it be faster? I don't know. And I will never know. We won't know until it happens. The truth is that I did a analysis based on this, and the best I can tell you is this particular middle section right here seems to be the most likely trajectory. And in our current time frame, it's just not there. This would make it seem like it's going to go up. You know, this makes it seem like it's going to go straight up right now, but we'd be having to go up by December 10th. Like, that's where it is, guys. Like, on December 10th, it would be like $50. That's just not, I cannot with a straight face call that out. You know, who could? Nobody could. I'm not going to do that. And it doesn't even make sense if you look at where this is on the wave, because this hit the wave real late and then it goes up real early. This hit the wave really early. This is very regular. So it makes sense that this would be more regular and kind of hit the wave as it hits. And these guys are tempoed quite nicely here to here. And you can see that tempo carries over into the motion of the waves. This next leg up is about the same length as these two. It's up, down, up. Very simple. Momentum, right? And right now, up, down, up, it's very slow. And I'm looking at the chart, I'm like, why wouldn't it be? It could be totally slow. So maybe it goes up early, but I think that this is kind of a misleading thing. This is partly what I looked at early on, and then I decided that I used a different metric here, and I figured that it was probably going to be closer to a high in February. And then it wasn't until later that I was like, if this is a two-part move, that February move might be representational of just coming back through the middle here, because this could be like a pivot. I don't think it's going to be a low, but I think it could be representational of like a leg one as opposed to like the full move. So I'm still of the opinion that February 2026 to March, roughly, that time period is a very important time period, but I wouldn't be surprised if we're just kind of right here at that time. Which is reasonable. Like, it's totally reasonable. This gives you more time to trade off these levels and build up another cause. And potentially, this could go the other way. I'm not really talking about that today. I'm trying to keep it kind of positive. But, it's not impossible that something happens and this goes the other direction. And the only thing I'd say about that is, like, on the big picture, if that's the case, it's still not illogical, because normally on an M cross, I'll bring this back for old time's sake, but normally on an M cross, you do get an equal part length on the bottom. And then if you go up again, this isn't always the breakout. So it's unusual because it is the breakout here, but it's not always the case that it breaks out. Sometimes it goes pretty low. It'll come back to this first break zone here because it's going back to check the overarching creek right there. You see that? So like sometimes that's what happens, and that's actually pretty normal. It's like an SOS with a backup. But these are often very equal. Like, they're pretty darn close to the same in terms of length. So what would that look like here? Well, it would probably be you took off too fast, you left some really big gaps, and then later it comes back to like 4. I don't think it would necessarily come super low, maybe 350 to 4 or something like that. And that would be like a backup here. It's not unreasonable. And I would just look at that as a gigantic M cross. Like, that's the way I would describe it. It's like, oh, we went into a, it's a really bad way to draw it, but we went into, we went into like a long form, wave cross like this. And I think that's pretty normal. Something like that where you're jumping a creek. We're very happy when we just do these kind of things where it's always working out. We're not very happy when we think about what if it stops there and it kind of comes back down? I mean, 'cause it totally could. If the operators don't really have enough gumption to take it up, or they didn't really design it to take it up to the top again, and I'm wrong about that, then who knows? Because this area is probably enough if you've been doing the bottom. 4 something makes sense. If it doesn't backtest 4, if it doesn't backtest 4 on a pullback here, no one's going to remember this, 6, 7 months from now probably. But if it doesn't, I would be almost expecting it to drop to 4 later. I think it's far more likely. And there's a lot of reasons for that, but a lot of it comes back to, frankly, like that first model that I ever used, the master fractal, as I called it, which is really more about revisiting the middle liquidity. And sometimes you see that after the SOS, right before it leaves a range, it'll come back and revisit middle liquidity and then mark up. It's a backup, as the Wyckoff people call it. So thanks. I appreciate that, Thorbladed. Yeah, being stuck down here, totally fine. Totally normal. I'm not particularly surprised by it. Am I going to come back if it starts running? I'm going to try not to do that because I don't like the idea of kind of going back on saying like this is a final stream, and then it just feels really icky to me. Whatever happens, if you guys if this does happen and you end up making good money on it, use it, for your family. Use it for whatever. It's not mine, and it certainly isn't necessary to give me any credit for it. You got to make your own trades and work through that. I'm just a guy that like to chart stuff, and if it happens to be this way, great. Well, that's cool. I'll be smiling somewhere, but I don't want to come back in like a gross way and be like, haha, or we did it, yeah, like that's kind of silly. I don't know. It doesn't feel right to me to do that. I'm not worried about the the thing about stocks, the thing about all trading in so many ways is that it doesn't matter if you're sitting here streaming it or not. Like me being on here does not affect the stock. So things are going to happen with or without me. And for that matter, I think and you guys already know this. It's not me trying to humble brag or something stupid. It's just stating the fact that like it will be okay. Like I don't think you need people necessarily to look out for you all the time. If you're worried about things, I get it, but I'm confident that every one of the people that follows this stream, we're typically very level-headed people. Will be just fine, And you've kind of seen so much of this. When you hang out with somebody and you listen to somebody for years, you typically just kind of it becomes almost like a second nature, like a second brain inside your own brain, which is a fascinating thing to think about. But I know that's true of my mentors. Like I still hear them in the back of my head when I'm doing different things. Even if they didn't know they were my mentors. So I'm sure that the stuff that I've tried to on this channel, the things that we've talked about, I think have all been, aside from maybe some really early stuff with the fractal stuff, I think all of that's been pretty good. Like I don't find it to be wrong, and I took it and used it elsewhere, and I found it to be very useful. So the idea of like taking a big picture and looking at potential movements and how that might interact, that's all great. you need to, of course, be aware that that's not necessarily going to happen, but there's nothing wrong with that. I don't. People get on to me about it at times because they just want to get on to somebody about it, but I don't find anything wrong with that. This has all been pretty good, you know. I've had people criticize me for all kinds of reasons, and I just don't think that the TA here has ever been in an attempt to kind of give you some kind of snake oil. The things that we talk about, I always try to relate them to, how is the market moving with ebbs and flows? How are these, structures built? What are they trying to achieve with liquidity in terms of like institutional trading? And it's never been about, hey, I've got the answers. Nobody else has. I hate that kind of stuff. I hate that kind of stuff. I've got the true answers. You have to come through me to get them. No, I don't. I'm just doing things that are repeatable. Like anybody can do that. You just got to look for the right signals, which I think is totally fine. I think it's a fair way to describe it. So, yeah, man, it's been good. I think I'm done. I don't know. I think that's all there is to it. I don't really want to keep going if there's nothing else to talk about. So we've hit the main topics today. We've talked about AMC and GME. We've talked about the where, what, whys, and all that junk. We even went over some of my shorter term kind of picks on things I looked at and talked about danger zones. I don't think there's anything else I missed. I don't want to be like, oh, I forgot to say that. I should have said that. We talked about these danger zones because I think that they're going to be the most likely places that you could have a change. We haven't really explicitly said anything about the lows, but I'll give you my numbers and I'll leave it at that. So the numbers that came up, 178, you could say 190, that's fine. And then it's a little bit of a jump to 217 and then 226. I don't have any other numbers that I find to be super viable in terms of a deep, deep bottom. So those are the only ones. If there's a sudden drop or if it has like a nasty sell down at some point and it drops beneath the floor, that's it. I mean, those are kind of out of order. They should be the other way around. But 226 would be awesome. That's the percentage shift. That would equal, if I got it right, it would be basically like $1 to some degree. In which case, we're kind of hovering above $1 to some degree on the shift chart, which is, again, pretty interesting to think about. That would be really cool. That's the only one I really care about. The others are just whatever. 178 has to do with that offering value. That was valued at 178. 180 has come up so much on the chart that it's impossible to ignore 180. Like, I just don't think you can do it. And I've said it before. I'll say it one last time. These are numbers that are there, but they're not necessarily going to be hit. I don't know if I mentioned it before, but this sell down, this is a really big S curve, and I found the markers here, and they go really, really, really low. I mean, they go pretty much down to like this bottom on the 50-50 right here with consolidation on the top there. And then in that time, I think it would have been reasonable to think that it could go down that low. It didn't pick that low of a low. So for whatever it was worth, there are a lot of really low targets, but they're not necessarily the best targets. And specifically, these two areas right here present a pretty wide range. I think it's like that. You're kind of shooting into the void, and you don't really know, There's a 50-50 target that goes to 226 here. But if it's a shallow S-curve, it should just find support above 246. We're at 247 right now, but it should find support above 246 and then start breaking above the threes. And that, I just can't question it at that point. I'm like, all right, it's got to just take it for what it is. I'm not ever going to be one of those people that's like, it has to come down to here or else. No. Just like it doesn't have to come up to here or else, like these are variable numbers. It's the best that you can get when you can't see all the cards on the table. So people that say 180, totally agree with them, totally possible. But I would not agree to say that it has to hit this level. That doesn't make any sense. Especially not on a drop. It's kind of like, why? You need more than just the only thing I think, I guess, is these people. I don't know why they would do that, but why would you do that? I don't know. Trying to get these people to sell their position. That's the only thing I can think. I can't imagine why else. And then GameStop. Oh, we didn't talk about lows here. So last thing here. I don't think sub 17 is super likely. We found 15 long term, but I think it's more of like an anchoring target. I think they were using it to like drive positions down, and maybe there's a subtle goal to get there because of the breakout here at 15. And that's what I'm thinking. It's like psychologically that's where it broke out, and so it's this zone right here. And that being said, I didn't really find it that many places. So, I mean, it's there, but it would have to be like longer term. Like this is like a double M and then it breaks down later. Or it just only pops here a little bit to 32 or to 40 and then drops. I think 18, what was it like? Oh, I'm sorry, it's over here because it goes 1640 up to 19. That zone, I don't have it marked off, but that zone seems more likely to me. And I would be skeptical of it dropping beneath even 18. And that seems more likely to me. So kind of like AMC, it's like, it's there. People can say whatever they want to say. You can say 150 or 120 or whatever. Sure. But what do I think is being aimed for? What would be the liquidity purpose of this? GameStop has a decent reason to drop there and retest these levels and maybe buy up some more shares before a takeoff, but below the range here or near this bottom in May. I don't find that to be true of AMC as much. So they'll probably go together. Final time, I'm going to talk about dates. 2 key dates coming up. Earnings, which is estimated on the 3rd, December 3rd for GME. And then the December 10th, I think, is the deadline for the vote for AMC for the dilution or the offering of up to 500 million more shares. It's an issuance notice. It's not going to happen for another 6 months after that date, but they would be allowed to issue that many after the period of time. And then so 6 months after the 10th, they'd be, it's something like that, or it's like 5 months. I don't know. It's in the documentation. Go read it. Pivot point on the 14th coming up, 13th, 14th. That's where it crosses up. And I found more than one pivot there, really coming from like 891 originally. And then I found another one today, which is just a really simple one on the wave here. It matches when that bottomed out in January of 2021 on a rebound. So like it rechecked the floor on that date. So it's possible that this could be running as into December to meet earnings and to meet this deadline. It's possible. I'd be very careful about this 350 to 4, and then from 550 up to about 650 is fine. That region is a danger zone for any kind of distribution. That's where it might go to fake us out. the window for this is so big. And that's another part of the reason why I kind of stepped into this, hey, I'm done kind of thing early, because I just think it could keep going. When I look back at it, February 2026 was kind of the big date. I said I think it'll rebound from these lower areas by then. But this pocket in January is really bothersome to me because to me the market is like done with its Santa rally kind of stuff. And I wouldn't put it past our operators, just based on the way they are, at least in the past, to just really drag it out. Drag out like a low down here or something going into January. I mean, and just really tick people off, and that kind of stuff is irritating, but what are you going to do? I just wouldn't be surprised. So I'm really hesitant to say it's definitely now. I think the earliest was going to be, again, maybe middle of November, and then the latest is so far out there. It really is like mid-January, maybe even February. So that's too big of a window. And that's what I said. I communicated that, again, I know I've said this so much today, but I did communicate that before we went into September. I was like, if it doesn't happen now, like the window is really big and it's way out there. It just feels very like a hamster wheel, it's just going to keep going. So this is a positive. The fact that it's already spent as much time down here is positive as it has on the upside. There's just nothing else to say. I'll think about it. I will. I've kind of already talked about why I'm leaving, but it's 100% personal things. It's nothing to do with anybody in particular. It's really nothing to do with the chart aside from just going on for too long. It's a change of career, and I do want to do trading, but I need to take a period of time to really get my finances in order, and so that I'm in a better position to do that. And I'm happy to do it. It's too distracting for me to try to juggle like all these different things. And I'm not against AMC, or I've already said this, but I'm not against AMC. I'm not against GME. I'm not bearish on them particularly. I think there's some outcomes here that might seem bearish short term, but I think longer term, I'm still very bullish on them. Going into next year, I'll say that. I just think that there's not really a need for me to keep prolonging this indefinitely. And, and it was kind of just me being selfish. Like I said earlier, I just wanted to go out on a high. So I wanted to go out after we ran and just kind of see it through. But I had done that anticipating it would be by now, like September, and it didn't happen. So at that point, I mean, I'm already kind of overextended. My time has come. We got through it, guys. We got through we got through 4 years. And that was another thing, is like this is like my 4th year. I started in November of 2021. That's crazy. So it's been a good run. Needs to stop. Thank you guys. I really appreciate it. I really appreciate everybody coming out day in and day out to support me and just do life with me, I guess, for a bit. It's very one-sided sometimes, but it may feel dramatic, it may feel a little silly or sappy, but meetings and partings, that's what Kermit the Frog says. Every life is just made of a bunch of them, and there's always time for each. And I think that I kind of want to leave it, and this is not like a bad note, but in some ways this is like a good time also for you guys, because I think being able to just make those decisions critically on your own, if it does run, and this happens to be like a low point, I think it's a really good time. So for that, to not have other people kind of like telling you what to do or think, but just make those decisions based on what you think is right. Thanks, Barbara. Yeah, we'll see ya. All right, guys. I'm not going to do this long goodbye thing anymore. I hope you have a great day. Hope you have a good end of the week here. Look out for that 246 support and see if we can get above 3 here, 315. I think we'll be in good shape. Otherwise, who knows with this? It could be a spring, so just be careful, like a deeper motion. And I really do appreciate you. I'll miss seeing your names.